Hello and welcome to all of you. Welcome to day 4. And sorry the room was a little bit late today. I was actually in another webinar, believe it or not, with some partners in America. And I thought, well, it was an hour long and I thought it'd be finished a lot quicker than it was. And anyway, I had to pivot from one room to the other. So who is excited for today? I want to get a sense of where everyone's at. Today is, in my opinion, the most important day because today is about managing risk. And how do you manage risk? Well, the single best way to manage risk is to have the right partners. I'm going to explain, the webinar I just came from actually explains exactly that. So how are you all feeling today? Are you ready to rock and roll? It's been a lot of information. Now I want to start with a video. And this video explains kind of where we're at. Henk, you seem to be the only one awake at the moment. Oh, we've got 2 people awake. welcome. Okay, so let's get started with this video. And this is a video that we made in, believe it or not, in 2015. And this was a journey we embarked on more than a decade ago to allow everybody to invest like the top 1%. And this is how we do it. So let me share this video with you. And this is exactly the solution that I have been talking about for you, because I'm a very big believer in not just sharing what you need to do, but actually giving you a solution to be able to do it. So let's go here and enjoy.
We'd like to introduce you to a revolution unlike any other throughout the history of mankind. This is a wealth revolution. And it's going global. Did you ever think that you'd be able to benefit from the only real, time-honored investment mankind has ever known? Real estate. Real estate investing has only ever been accessible to a small percentage of the world's population. This is no longer the case. The wealth revolution means that wherever you are on your wealth journey, be it taking your first steps or taking off globally, you can join our global community, a community of real estate investors just like you. The Global Wealth Group is experiencing exponential growth and
we're going to play this game again. What is Zoom doing at the moment? Okay, that is weird. I've never had this before on Zoom. Right, we'll do it differently. Let's play the ecosystem video.
real estate investing has only ever been accessible to a small percentage of the world's population. This is no longer the case. The wealth revolution means that wherever you are on your wealth journey, be it taking your first steps or taking off globally, you can join our global community. A community of real estate investors just like you. The Global Wealth Group is experiencing exponential growth, and wealth has never been this accessible. A truly global wealth revolution. We dream big, and our dream is to impact the lives of 1 billion people. 1 billion people. How will we do this? Through groundbreaking digital platforms that allow investors like you to take part in exciting real estate investment opportunities. These opportunities are waiting for you everywhere, anywhere, worldwide. Now you can invest in real estate with any amount of money, from the comfort of your couch or your internet device. Introducing our global brand ecosystem. Wealth Create, Wealth Migrate, Wealth University, The Wealth Movement. WealthCreate.com is a platform for those taking their first steps on the wealth journey. The new investors who earn whilst they learn using real or virtual currency. Imagine this. Now anyone can own part of a hospital, a share in their local shopping mall, co-invest in a new and exciting development, or even earn quarterly returns from residential and commercial tenants. They, you, can now stand alongside multi-millionaire investors and earn the same relative amounts. WealthMigrate.com is a platform for those investors who are already soaring, as well as those who seek to join them. You can now own and manage a global portfolio of commercial real estate and do it all online. You'll benefit from the capital growth of your investments and get paid quarterly dividends in first world currencies, whether they be from commercial tenants or the funding of developments. The global dashboard shows all available opportunities, potential investment pledges, upcoming deals, and most importantly, allows you to manage your global diversified portfolio in one place. Passports and visas also become easier to obtain, as well as tax-efficient structures that allow global flexibility. Create the freedom you desire for you and your family. Wealthuniversity.org is a video-based e-learning platform for those who want their wealth knowledge to take off. Our research shows that the wealth mindset is the single most important aspect of creating and sustaining wealth. Test your wealth IQ and challenge friends and family to find out theirs. Acquire the thinking, secrets, habits, and proven success strategies used by the world's wealthiest investors, as well as that of our global community, who aren't just talking about it, but are actually creating it. Graduate and change your destiny and your future. Wealthmovement.com is the global gathering of our fans and followers in conferences hosted in local cities around the world, inspiring minds to help each other create more sustainable global wealth. The goal: to build a wealthier world together, and together to help reduce the wealth gap between the haves and the have-nots. Gain the latest up-to-the-minute knowledge of technology forecasts, internet finance, exponential thinking, collaborative smart investing, co-creation, apps and platforms, global wealth forecasts, cryptocurrencies, and new and exciting investment opportunities. This is your chance to meet your global wealth partners, co-investors, and friends, to be inspired by the world's wealthiest individuals and to learn to think how they do. We are pioneering a global wealth revolution. Join us. Let's change the world.
So what did you think? Let me close that off. That is the future that we're building. No volume. How's that possible? Okay, I give up. That doesn't make any sense to me because it's coming directly through the system. Did anyone else have a problem with volume? Just please let me know in the chat box quickly. What I'll do is I'll share that video. I'll link in the chat room. Let me just see just type in the chat there if you had no volume, because that makes no sense to me. It's coming through the system. Okay, mine had volume. Okay, good. People did have volume. Okay, weird. I'm not sure. Okay, let's rock and roll. I'll get into, when we have the break just now, I will put the link in for that video, for the ecosystem video. Now, let's get straight into day 4. And what is it all about? It's about risk management. And how do you actually manage risk? Well, it comes from your partners. So what we're going to be looking at today is, how do you manage risk? How do you find the right partners? I'm sure most of you, me included, have lost money by investing with the wrong people. How do you learn from that? And what do you do differently to make better decisions in terms of that process? So as always, my strong advice for these events is be present, take notes, pay full attention, don't be distracted, don't be doing other things. You do have the resources guide. I've shared it with you all the time in terms of where you're at, in terms of the resources, and you can literally go and get all the recordings and everything else. So if I literally just go here and I go to the resources guide for you, you've basically got all the resources. So day 3 recording will be there, and you can go through, and everything's here. You've got all the resources, everything in one place, making life really, really easy for you in terms of this whole process. Okay, and all the different options. Whether you want to walk, you can join Wealth Hackers. If you want to get in a car, you can join the Wealth Accelerator. And if you want to apply for the mastermind, you can apply for the mastermind in terms of that process. Okay, so your resources are all there. You've got the WhatsApp groups, you've got the school group. If you haven't joined the school group, I strongly recommend that you do. This is where we do everything. It's our community group. It is free. So there's a free group. It's the Wealth University. There's literally no reason why you cannot participate and be part of this in terms of this group. So everything's here. You can join it. You can chat. You can engage. in terms of the whole process and where we're actually at. So I'd strongly recommend, if you do nothing else right now, click on this link and come and join us. So let me just put it in the link. And we've also got lots of resources. So if you join this, you literally can go here. You've got success stories. You can go and see. You've got Start Here, which is a course I did on the set. It's about an hour long. The 7 mindset things you need to invest. You've got the investor roadmap, which is how to actually get started and get on the platform. And then we've also got Know Your Numbers in terms of this process here. So that's where you're at basically. Okay. Let me just take you forward in terms of that. And then upgrading to the VIP. If you want to do that, I know we're sort of in day 4, but you can get all the recordings. You can also get access to the workbook. And, there's a lot of benefit in being part of the VIP. Why are we here? Globally diversified passive income and portfolio growth. So this is about diversifying across countries, currencies, assets, partners, and time. And whenever you've got a goal, you should have a big goal. You break it down into many monthly goals, and then you got your daily tasks and your activities in terms of that process. Now, your action steps for last night were to research and identify at least 3 different investment strategies: passive income, active investing, value, to create a hypothetical diversified investment portfolio, and with different asset classes and allocating percentages to various asset classes. And then to consider Wealth Accelerator, the Diversification Mastermind, and finally to share one key takeaway. Now, one of the things that's important here, you can choose to do this all yourself. And so I'm going to keep telling you what you do if you're wanting to do it all yourself. Or if you want to do it with someone, because there's 3 options. You can keep trying to do it all yourself. And the second option is you can do it with someone. Like you can join the Wealth Hackers, and you're gonna get all the resources, but you're going to do it on your own. Okay. Or you can join the Wealth Accelerator where you do it with someone. Okay. And then the third option is you join the mastermind and you have it done for you. Those are your options. So this, if you don't understand how to research and identify different investment strategies or create a hypothetical diversified investment portfolio, the mastermind level, you don't have to, because the family office is doing it for you. Does that make sense? Do me a favor in the chat box. Just let me know if that makes sense. Oh, I can see I need to update so everyone can chat to everyone. So there are. I've made it so that you guys can all chat to each other as well. Okay. Then as your gold homework, it was to research the different asset classes and their historical performance and to research and compare investment vehicles. Now, I just wanted to share with you something. I did this in the VIP room, but I just wanted to share this with you quickly. So if you take our mastermind, and I just share with you literally last month. So here's the commentary. So every month we sit with our family office team, and we basically, it takes about half an hour a month, and Anthony takes us through what is happening in the different markets, what's happening in each of the different asset classes, why is it happening, and then we go into what are the key trends that are happening, what's happening with inflation, what's happening with interest rates, what's happening with AI, like anything that's actually important for the month. I love it because I don't have to spend hours, going and reading all these different documents and trying to figure out what's right and what's wrong. And, once a month for 30 minutes, Anthony comes in and tells me everything I need to know. I call it the TED Talk once a month, where I get everything I need to know in the financial markets. And then obviously there's a Q&A if I need to ask any questions. So, and when I say obviously I'm part of the mastermind, so that's what we're getting in terms of the mastermind, and we get that on a monthly basis. So again, you can go and figure out how to do this all yourself, or you can have it done for you in terms of that process. And if you want to talk to one of our team members, please just book a call and sit down with one of our team members. So I'm going to keep reminding you this today and tomorrow. I believe fundamentally that you have 2 options. The first is that you can be like the generally 99% who use one of these 3 reasons. I don't have the money, I don't have the knowledge, and I don't have the time. And you get to the end of the year and you're frustrated. I love this picture. It depicts someone who's anxious, who's frustrated, who's gone year and year with a New Year's resolution and nothing's changed. And you can be that person and you can try to do it all yourself, and you can have this frustration and anxiety, or you can choose a different route. And that's where you choose to get what you want, You choose to get the knowledge through partnership, and you choose to get the time that you want. And, again, there's a picture here of a happy family, generational wealth, at Christmas time, where they've got peace of mind. They're spending time together, they're having fun, they know that their assets are being protected, they know that they've got a plan. And, for me, this is, depicts freedom. So the question you get to ask yourself is, are you going to be option A, which is kind of all about excuses, or are you going to be option B, which is all about results? And you see, what's really important to me is that we built the entire company based on community. And what is community? Well, we're here to help people get results. So, when you take the Wealth Hackers as an example, the community component, the coaching accountability we are receiving is actually priceless. This is what Frankie said about coaching. William said, I did the 30-day challenge. I started investing. It was worth it. Frankie said, passive income challenge changed my life and has put me on a wealthy mindset. This is my wish for all of you. And I've been running and building a community company since 2004. These were my very first events. This picture was my very first event in London in 2004. All I've ever done is teach people and try and inspire them to achieve the impossible, and then actually get them to go and do it and to be able to get results. So I'm not going to talk about all the different pictures here, but Baldwin's one of the biggest developers now in South Africa. That was Ian Fife, who is the editor of the Financial Mail. Andy Buchanan, who is the managing partner of Buchanan Boys, the biggest conveyancer in the country. This is Chase Everett, if you know the estate agency Chase Everett. Dr. Hannes Dreyer, when we were launching England, when we were launching Australia. So, this is what we've been doing. These were the buyers' trips. 15 years ago, the way you bought was you flew to England, you flew to America, you flew to Australia, and you bought properties. We do wealth weekends where we get, together with like-minded people, and we spend time together. And we've been doing this now for close on, well, actually over 20 years in terms of the process. And it's all been based on community. And my invitation to you is this picture back here was that buyer's trip in London last year. But it's all about people coming together. And the question you're going to have to keep asking yourself all day is, are you going to walk, which is the Wealth Hackers? Do you want to get in a car and accelerate, which is the Wealth Accelerator? Or do you want to jump in a plane and literally have the captain take you there and do it for you, which is the mastermind? And that's really the choice people have. So just as a reminder, in terms of this acceleration, and I can see that, Joseph, you just asked the question. Here's the link again. So for the Wealth Hackers, it's the diversificationchallenge.com/Wealth Hackers. And when you join, you can either pay monthly, or if you do it annually, there's a whole bunch of benefits if you join annually, plus you get a 20% discount in terms of that process. I cannot understand why every single person would not at least join the Wealth Hackers, because there's even a 7-day free trial. So, you can literally get going and just test it, if nothing else, over the next 7 days. So anyway, that's there for you. I've put the link in for you, Joseph, and for others. Then you've got the Wealth Accelerator, and that's where we take people on a 7-step journey over 90 days to be able to accelerate you there and to be able to get your results. I basically, took people through this. So I don't know what's happened to the slide, but anyway, the bottom line is it's over $60,000 worth of value, and you get it all for $997. So this is our fastest way to help people get results in a 90-day period. Again, we call this the Wealth Accelerator. And if you go to this link here, you can literally, so I'll just put this in for everyone. So the Wealth Accelerator. Okay, and then finally, we've got the Mastermind, which is, we call it Private Wealth Global, and it's a collaboration between ourselves and our family office. And this is all about getting results quickly, simply, and safely. And how does it actually work? Oh, I think I might have clicked on the wrong slide there. Just 2 seconds. Yep, I did. Sorry about that. This is the right slide. And, we basically take people on a 9-step journey. So again, I did say this to you yesterday. This 9 steps, you should screenshot this. And even if you never work with us again, so be it. But when you talk to your financial advisor, you should make sure that they are implementing all of these 9 steps, because these 9 steps are what are being implemented at a family office level by the wealthiest people in the world. So this is my strong recommendation. If you join the mastermind, we take you through these 9 steps. We invite you to the exclusive learning platform where you've got the community and all the 9 steps and everything in one place. And you get invited to the exclusive investment platform where there's 50% discount on deals, private banking service, etc. You get the bonuses of the immigration agents, the wealth weekend, and the buyers trips. And if that is something of interest to you, then literally go to this link, diversificationmastermind.com, and come and have a conversation with myself. Remember that there's 2 ways of doing this. The one is you like, right, the mastermind is a no-brainer to me. I want to join, and you click on the priority button, and that actually gets you priority in the queue. You'll meet with me personally, and we'll get you, going. And obviously, we'll make sure there's a right fit for you and for the mastermind. And assuming there's a right fit, then we'll get you going in terms of the whole process. If you're still not sure, then you can literally go to the apply, and that's where you can sit with one of our team members, my partner Alex, and he can take you through what it is, how it works, etc. Again, you can go read all about it. You can get an understanding of what it's about. You can go look at all the testimonials. There's millions of them. Okay, in terms of that whole process. So hopefully that gives you an idea of how you can walk, how you can get in a car, or how you can fly. Now, as Zig Ziglar said, you can have anything you want in life if you help enough other people get what they want. And for me, I want to help people get passive income. I want to help people get freedom. I want to help people build a legacy. So these are things that are very, very important for me. And the more that I help other people do that, the more I can, do it for myself based on Zig Ziglar's principle. And so that's why we built this whole value creation. And you can go and read all about it. You can go watch the videos, etc. It's all there in terms of the process. But how does this value ladder start? Well, in the beginning, you can literally go to the Wealth University. It's free. You can go and get started. If you want to walk, you can join the Wealth Hackers. And this is where you get access to the right information, plus you get the accountability. If you want to get in a car and accelerate, well, then you join the Wealth Accelerator. It's a 90-day sprint, includes the Wealth Hackers, and you basically get all of the different resources, but we help you over 90 days. You come to a wealth weekend with us, and you get to meet the family office. You get to shake my hand, look me in the eye. This is all about building trust and getting you momentum over 90 days. And if you want it sort of done for you and you want to jump in an airplane, and I proverbially joke, have me as your captain and have the family office as your captain, then you join the mastermind and you have it done for you. And there's a 9-step process. So do me a favor, just type in the chat box, does it make sense to you, the difference between, you can get started for free, or you can effectively start to walk. You've got access to all the resources, but you're going to do all the home study stuff. We're there if you've got questions. Think of it like a tutor, but you ostensibly, you're doing it on your own. That's the whole idea of walking with the Wealth Hackers. Then you got the Wealth Accelerator, where you're jumping in a car, and we're doing it with you. And we're helping you accelerate over a 90-day period. And you're joining us at the Wealth Weekend, and you're actually meeting us physically in person, and you're meeting the family office physically in person, and you're really building trust and getting momentum in a 90-day period. So that's getting in the car. That's the Wealth Accelerator. And then over here, you've got Done For You, which is where you join the mastermind, and they actually do it for you. Does it make sense? Just do me a favor. Just type in the chat box, please. And I'd really appreciate if everyone would do this for me, because I need to be clear as to whether I promised you that I would teach you the information, but I also promised you that I would not drop you and that I'd give you a clear way forward. And I've now, on this page, have given you a way forward. I've given you a way forward, which is free. I've given you a way forward, which is, very little amount of money to get started, but at least you can get access to the knowledge and the accountability. I've given you the Wealth Accelerator so that you can sprint in 90 days and get real momentum. And I've also given you the mastermind where you can have it done for you. Does it make sense? I just want to say, so I've got a couple of make sense, does make sense. Okay, so there's only 3 people that make sense. Everyone else is confused and overwhelmed. I don't, for me, I don't want people to not really understand what we're doing and why we're doing it. And I want this to be very clear. And a number of people have said to me, Scott, how does this value ladder work? Well, this is our ladder to mastery. And the final thing that I want to share with you is that our aim, if you can see the little green arrow, is to help each and every one of you on the journey. Wherever you choose to start, we will help you grow the momentum. The ones I enjoy working with most are the business owners. I've been a business owner for 22 years now. The professionals, and where I work with people on a one-to-one basis, and we really take their wealth strategy to the next level. Our mastermind now has, I don't know the exact number, but it's about 140 members. And that's the part that I'm most grateful for. That's the part that I love. That's what really inspires me. So there's two things I enjoy doing. One is at a mastermind level, because that's where you're building real tangible relationships. And then what I learned there, I always try and democratize and then provide back to the wealth accelerators and then to the wealth hackers, etc., and make it accessible. So that's kind of the journey that we're on. Right, today I'm not going to be giving you any financial advice. In fact, today, more than any other day, I'm going to be sharing with you my mistakes so that you can learn from my mistakes and you don't have to make those mistakes yourself. So we're going to go into risk management now. And if you look here in diversification, module 4 is all about partners. Now, as you know, within Wealth Going Global, I go a lot deeper into this. Okay, so again, if you go to the Wealth Hackers, you can see here that when we go into the Wealth Hackers, and I go to the classroom, and I go to Wealth Going Global, you'll see that there's an entire module around partners. And, it's a lot longer than what I'm going to go through today. But I just wanted to, I'm always going to promise you, there's always substance to everything I share with you. But what I want to do with you today is share with you the most important part, what I'm going to call the tip of the iceberg. So module 4 is all about partners. It's the power of partnership, and it's investing globally with confidence. The mission will help investors be confident in their ability to choose the right partners. And this is all about partners and due diligence. So there's a bunch of resources. So when you go to the resources, you'll notice that there's some cheat sheets where we're literally going to teach you how you can go and select and get the right partners. So what I'm going to share with you today, there are cheat sheets. Now, the next page I'm going to share with you is the 4 golden rules. And I strongly, strongly recommend that you write these down. I also strongly recommend that you really pay attention right now, because what I'm about to share with you in the next 5 minutes is so simple, but yet it's probably singularly the most important thing that I've learned when it comes to investing. Because this, as Warren Buffett says, don't lose money. Rule number 1. Rule number 2, refer to rule number 1. So for me, this is the most important thing that I've learned. How do you choose your partners? So the first rule is that they should have a 10-year track record. So they should have been in business for 10 years or more, and that they've got a track record. Now, this is really important, because any idiot can make money when the market's rising. But how did they behave when COVID happened? Or how did they behave when the global financial crisis happened? Or how have they behaved right now? In the last 2 years, there's been this rising interest rate cycle around the world, which has been really, really difficult for investing. How did they behave in those periods? Because something I feel very strongly about, someone should not be judged by their character when things are going well. They should be judged by their character when things aren't working. Let me say that again. People should be judged by their character when things aren't working, not by how they behave when they are working. And so when you've got someone that's done 10 years plus, generally market cycles move in 7 to 10 year periods. So if they've got a track record of more than 10 years, ideally you want 15, 20 years, because then you can run 2 cycles. You can see how people have behaved in that period. Now, do me a favor. I'm going to ask you each time, and I really would appreciate if you put in the chat room, if this makes sense to you. Okay, because these are simple lessons, and yet often the most simple things in our lives, we know them, but we don't do them. Okay, so the first rule is they have to have 10 years more in track record. The second rule is that they have to have specific market knowledge. So if you meet a jack of all trades, that is exactly who you don't want to work with. Okay, so if someone comes to you and they're like, I'm doing a data center 1 week, and I'm doing retail the next week, and I'm doing industrial the next week, and oh, by the way, I also trade crypto on the side. That's exactly who you don't want to work with. You want to deal with people that have single-minded focus. If they are doing data centers, that's all they do is data centers. If they are doing industrial buildings, that's all they do is industrial buildings. If they do structured notes, that's all they do is structured notes. And what's really, really important is that from my perspective, what we do, our single-minded focus is diversification. So the whole module today is going to be about how to find the right partners. Because what I've learned and what I'm very good at is how do you find the right partners? Because if you're going to diversify, you cannot be an expert in everything. It's impossible. You cannot be an expert in all different asset classes, all different countries, all different partners. It is impossible. So the only way to do it is to specialize. Okay, and so what we do is we specialize in diversification, and then we have the partners that specialize in each one of their specific asset classes. But your partner, no matter who you're working with, they have to specialize in one specific area. Right, number 3, probably the most important one. Have they put their own money in the deal? Now, this happens all the time. And I've been doing this for nearly 30 years. It'll be 30 years next year. And what's interesting for me is that what most people want is they say, hey, Mr. Investor, come and Mrs. Investor, whatever, come and give me your money. I'll take no risk. I won't put any money in. And if we make money, I want 50% of the upside. But if we lose money, you lose 100% of your money. By the way, that's exactly how the financial industry works. And that doesn't work. You've got to have people that have their own money in the deal so that they're tied to the same ship. Like when that ship goes into stormy waters, you want to make sure that their money is also in the deal. And secondly, and you can see it's in brackets on the same terms because I learned the hard way. We had a deal in Austin, Texas, in America, where the guy put money into the deal, and so I was comfortable. Like he put stand to be corrected, I think it was either $250,000 or $500,000, which represented about 10% of the total investment. I mean, it was a big check size. But when the shit hit the fan, and I'm sorry I'm being crude, but that's what happened. When the shit hit the fan, suddenly we found out that his money was in a preference position, which basically meant it was in a better position than our money. And so now, and again, unfortunately in life, you learn these hard lessons the hard way. I always make sure that not only is the person putting their own money in, but it's on the same terms as me. Very, very important. Now, do me a favor. Does this make sense? Because this is the single most important question. The very first thing you should ask someone is, are you putting your money in? And number 4 is that at least 80% of the money is coming from local investors. So again, when I was doing this when I was younger, we would go, and I'm going to show you the lessons I learned and the mistakes I made. We would go raise all the money to buy a building with a bunch of international investors, and there was no local investors. And you've got to kind of ask yourself why. So I've learned, and I'm going to share with you how to do this, that you've got to have at least 80% of the local capital. If locals are prepared to invest in a deal, then surely it's a lot more attractive for international investors. Now, I want to tell you a story, and I'm going to stop sharing just so you can see me here properly. So in 2009, 2010, we start basically trying to buy shopping centers in Australia. So we fly over there. I've got 2 very wealthy gentlemen that are on my team, and we're looking to buy shopping centers. And we fly over there multiple times to buy shopping centers. And we come across this shopping center. It was about 2 km outside Brisbane. And it was a really good deal. Now, to give you some numbers, the building, it had been bought for $30 million prior to the global financial crisis. The debt to Investec Bank was $24 million. And we had put an offer in for $16 million. So like, whatever that is, like 50% of what the original price was, and even 30 or 40% below what the debt is to the bank. And it got accepted. So we then had to do more due diligence because that's the way it works. And we came very close to doing this deal. And we ended up not doing the deal. And I can't even remember why, but we didn't do the deal. And about a year later, I met this guy who was living in Australia. He'd been doing business in Australia for 40 years. And he was a very, very successful property person. To put in perspective how successful this guy was, he flew 30 of his mates plus their wives to the Rugby World Cup, and he paid for everything because he could. Okay, that's how successful he was. And he said, I told him about this deal that we nearly did in Brisbane. He goes, oh, I saw that deal a year before you guys even saw it. I was like, what? He goes, yeah. So what I realized in that moment, literally with that story, was that when there's a good deal in Australia, let's just use Australia, but by the way, it's the same in every country in the world. When there's a really good deal and it gets sold off market, so no one knows about it. And it goes to the old boys club. Sorry, ladies, but this is still the way it works. I'm sure it's changing, but this is the way it's traditionally worked. It goes to the old boys club. So the kind of the big investors get first eyes on any deal, and it's off market. No one even knows about it. And they pick up the best deals. If it doesn't get sold there, then it goes to the big broker networks, the CBREs and all of the worldwide broker networks. And they try and market and sell it to Australians. Let's just stick in one country for now. If it doesn't sell there, then it goes to the international brokers of CBRE, and they try to sell it to people in South Africa and Hong Kong and China and India. Are you with me? So what's the moral of the story? Can anyone tell me the moral of the story? Come on, I want to see if you're following me. Come on. I'm specifically asking you. So yeah, Joseph, you're already on the back foot. I'm going to be even more crude, and I'm going to be direct. The shit that no one wants to buy locally is sold overseas. Does that make sense? The shit that no one wants to buy locally is sold overseas. And so if you don't invest with locals, you are always going to be on the back foot in terms of your investments. And this is such an important lesson. Like, this is probably one of the most important lessons that I can give you. Now, I'm not saying you should only invest local, because like I truly believe in being a global citizen and diversifying. But when you do diversify, you have to invest with locals. And if you don't, and I'm going to show you, it ends badly. So do me a favor, take a screenshot. Those are the 4 golden rules. If there's one slide out of the entire 5-day challenge that I would recommend you pay attention to more than anything, it'd be this slide. Because this slide is how you manage risk. And most importantly, how you find partners. And if you look at back in your life where you've lost money, and you play a little game and you stress test these 4 lessons, then I would ask you, I'm almost sure that you would have broken one, if not all, of those golden rules. Does that make sense? What is CBRE? CBRE is a broker network. So they're an international, I mean, there's lots of them. They're just an international commercial real estate broking fund. Okay, let's rock and roll. So when we go through a process, now again, the way that most people think, most kind of mom and pop retail investors, they think that you must go look at a deal. So they find a property deal and they say, hey, is this a good deal? Should I invest? Shouldn't I invest? But where they get it wrong is it's not about the deal. It's always about the partner. So look at our investment process. We always start with the partner. We do a due diligence on the partner. By the way, we never go find a partner anymore on LinkedIn or whatever. We never do that. It only ever comes through referral. So it's already a network of people that we already know, like, and trust. And by the way, you're going to meet Selwyn today, who's part of the private equity team. And he's going to teach you how he finds his partners. And you'll notice it's all through networks. And you find a partner that you know, like, and trust. And then only then do you, once you make a decision that you like the partner, do you then look at the deal? So this is the deal due diligence, which goes through an investment committee. And then once you then put it out, the deal goes live on the platform, you raise the money on the platform, you close the deal, it goes through the structure and the money flows. You basically own the deal. When the deal pays out, whether it's monthly, quarterly, yearly, there's a deal distribution, there's deal tracking, and then it goes into a deal exit. And if there's a capital gain at the end, then you get the capital gain, you get the return of the capital, and you get your funds back. So that's kind of the kind of the process. And there's a bunch of myths when it comes to investing. And myth number 8 is that you need to do it all yourself. So, I tend to say to someone, if you want to go to America and you've got $10 million, I mean, you think you're a big wig if you've got $10 million cash. You go to America, you are irrelevant. Irrelevant. You basically don't exist. Okay, $10 million is nothing. You've got no network, no track record, you've got no ability to get finance, and they don't care. So the only way, and I'm sorry I'm being so direct, it's the same in England, it's the same in Australia, same in Europe. So this is a typical investment process. And to truly diversify, you've got to be able to find the right partners, and you've got to be able to invest alongside them. I shared with you on Monday the tribute to Clem Sunter, and funny enough, it's literally his funeral today at 1 o'clock, his memorial. And, this all started out, this whole due diligence approach actually started out with Clem and this book that came out in 2013. And, on the day, and it makes me emotional, on the day of his funeral, I want to honor him, because he is the one behind this, because we built out the systems to make decisions. And from that, it evolved into GIDS, the Global Investment Due Diligence System. And, we look at the countries around the world, which countries, I taught you I'd do this on Tuesday, which countries are the best countries to be investing in based on the fundamentals? Which currencies should we be looking at? Then we go down to the city dynamics. Where should we be investing in the cities? Then we go down to, the partners and what is like, who should we, do we like this partner? Then we go down to the property, and then we look at the structuring and how the deal's being structured. And then you do the due diligence. And then you want to obviously optimize the investment ongoing. And obviously you get your distributions and your exits. So there's a 10-layered system in terms of actually investing. Now, we call this GIDS. And GIDS 1.0 is the Global Investment Due Diligence System, is our residential system. So this is how we invest and how we evaluate properties at a residential level. GIDS 2.0 is how we do it for commercial property, commercial real estate, and alternative assets. And I just want to go and check here quickly. I'm not sure if in the resources we've given this to you. Let me just see. I know it's definitely, if you join the Wealth Hackers, I know it's definitely within the Wealth Hackers. So let me just see here quickly. I just want to see if I've given it to you. No, I haven't. Okay. So under the Wealth Hackers, if you go here and you go to partners, you'll notice that you've got the full breakdown, and you've actually got in here the whole thing, GIDS 1.0, GIDS 2.0, everything. So it's all here in terms of the process. So just to kind of make life easy for you in terms of that process. Okay, so this is our due diligence system that we've built over the last sort of 20 plus years. And again, my philosophy in life, you can go and do this all yourself, or you can just copy in terms of that process. So yeah, this is one of our due diligence processes. And then we get to the next part, which is how you select and designate sponsors. So this is not our system. This is the way the international institutional markets work. And they've got 4 names. They've got tenured, established, developed, and emerging. You've got management experience. How long has the management been doing this? The company's operating age, and then how much assets under management do they have? So hopefully that's fairly self-explanatory. And again, under the resources, we had the cheat sheets here. So we've got partners, we've got due diligence, we've got compliance and risk management, and we've got the deal risk category. So what I'm sharing with you today, we do give you away under your resources. Okay, so it is there for you in terms of that process. We've also got, just by the way, there's a number of white papers, and there's some videos on what is the difference between yield and cash on cash and IRR. So there's a lot of gifts that we've given you today for free as part of day 4 to help you make better decisions. Okay, so that's basically how you select and designate a sponsor. Now, let me give you examples of this because I think it's much easier to teach you through real life. So take an example of Feltman Equity. So we've done a number of deals with these guys. They're based in Florida in America. So they've got $100 million invested of their own money. They manage 4 million square feet of office. They've got 100 years worth of experience. They've been through 7 recessions, and they've got $3 billion under management. Now, if you go to our platform, you can see that this sponsor is tenured, okay? And we bought this bank building. I mean, how cool is this? Did you ever think you would own a piece of a building like this? I didn't think I would. I now do. This property was giving us a 9.6% cash on cash and a total return of 16.7%. And you can see the deal is office, the sponsor is tenured, and the risk is core plus. I'm going to explain that to you just now. Are you with me so far in terms of a tenured type partner? Another deal, another sponsor, MAG. They've been around for 4 decades. They've got 43 properties, over $300 million assets under management. They've had a historical track record of 18.8% and a cash on cash of 9%. Now, we've done 3 deals with these guys. We've had 1 exit, and the other 2 deals have paid every single month consistently, no problem. We just closed a 3rd deal with them literally last week or the week before. You can see this deal is an 8.3% cash on cash. Remember, this is all in dollars, and it's all net, and it's all in your pocket, with a total return of 12.16%. And you can see again that the deal is industrial, the sponsor is tenured, and the risk is core plus. Then you've got another deal that we did with them. Again, this was a 10.5% cash on cash. This was a 1-year deal. We got in and out in 1 year. So we invested, we got a return, and we exited. And you can see here that this, again, the sponsor is tenured, and the risk, and you can see it was mezzanine debt. This is a structured note. I mean, this is with BNP Paribas, one of the biggest banks in the world, and with our structured note partner, which is Cashbox IDAD. They've done over 1,000 structured notes. And again, sponsor is tenured. The deal is structured notes, core plus. This was giving a 15% return in cash on cash. Are you with me so far in terms of how this actually works? Then you got Mac Roberts Media. This is a different type of deal. Funny enough, this was the webinar I just came off with this guy, DWG. And you can see that this is an emerging sponsor. Now, the reason being is that the company had only been operating for 3 years or less, but the partner had been in the business for 20 years and had done over $1 billion in deals. And so again, this was an industrial deal. The total return was 17%. The cash on cash was 8%. But you can see there that the sponsor was emerging. So it just gives you an example of how this actually works. And the question that you always have, or the question that I believe people always have, is that myth number 9 is that, again, you think you can go and do it all yourself. You can go and do your own due diligence. But what I like to visually represent is if you want to do it all yourself, you need to have tax, brokers, lawyers, onboarding, management agents, legal, compliance, SPV, investor reporting, banks, local jurisdiction, data, family office, or you can have 4 simple steps on the platform. You can sign up for free, you can set up your account, you can browse and invest, and you can earn an income. So how does it actually work? Well, you're over here, you're Jill or Joe Soap, and you've got your own bank account. You set up an investor wallet on our platform. Each of you has your own wallet. We've then got a marketplace, call this Wealth Migrate, where you actually go and invest. Then a deal comes along. This might be the last industrial deal we just did, which is an investment opportunity. We then aggregate all the money together. So you might invest $10 and someone else might invest $1 million, and it all gets aggregated together. It then goes through an investment structure, which is tax efficient. So this is an SPV, a special purpose vehicle, and then it ultimately invests in the deal. So it owns the deal directly. When the deal pays out a return, it goes into a deal wallet, and then from that deal wallet, it gets invested directly into investors' wallets. Does that make sense? Do me a favor, just type in there yes, no, if this makes sense. Because this is how it works. So that you understand when you invest, you're investing at your individual capacity, but because you're aggregating with other investors, we all get to invest like an institution. If we don't invest together, so by coming together, we have the power of investing like an institution. If we try to do it as individuals, we're irrelevant. No one cares. Even if you've got $10 million, no one cares. Okay, I'm just going to have a quick sip of water here, because we're now going to pivot to what I believe is the most important part of today's session, and arguably could be the most important part of the entire challenge. And this is where I'm going to share with you the lessons I've learned and the mistakes that I've made. So someone asked a question yesterday, Joseph, I think it was you in the VIP room, and he said, Scott, have your partners lost money? I think it was the family office. Have they lost money? And if you ask me the question, Scott, have you lost money? The answer is yes. When you've been investing for 29 years, if you stood here and said, I've never lost money, you would either be lying, cheating, or stealing. Because it is impossible, and please hear me very clearly, it is impossible, no matter how much due diligence you do, to get it right every single time. It is truly impossible. So you can do as much due diligence as you want, and you can get better and better at making better decisions. But there's no way, it is impossible that you're going to get it right 100% of the time. And so that's why I like diversification. As an example, if I had $1,000, and by the way, it could be $1,000, could be $10,000, could be $100,000, could be $1 million. It makes no difference. What most people do is they take all their money. In fact, I'm going to stop sharing so you can see me properly here. What most people do is they take all their money and they invest in one house or one building. They put all their eggs in one basket. And if that deal doesn't work, they've lost all their money. Or if the tenant stops paying or whatever, they lose all their money. So they got all their eggs in one basket. The beauty with technology now is that you should put that money into 10 different deals, or maybe 5 different deals. It doesn't matter exactly the proportion, but you should be spreading the risk. And that's why I say to people, you should diversify across countries, currencies, assets, partners, and time. It is critically important that you diversify across the different areas. Now, let me share with you some of the mistakes that I've made in terms of this process, and the most important thing when it comes to partners. So this was my real realization, and this is what I've learned over the last 10 years. There's 2 ways of investing. There's an old school way of investing, and there's a new age way of investing. So if you take the 2 different ways, the old school way of investing is all about control. It's a very 20th century mindset. I want to control everything. The new age way is about doing it through diversification and partnership. So as an example, if you've got a building, could be any building, could be a house, could be an office building, could be an industrial building, could be anything. The way you would normally do it, you would borrow 60% from the bank, you would get 30% in private equity, and you'll get 10% in equity. It's called the capital stack. This is how you would generally fund an investment. Now, in the control way, in the old school way of doing it, the investors want to own 95% of the equity. They want to have all the control. Okay, it's just the way it works. It's a very old school way of doing it, but they want to have all the control. On the other side of the fence, the new age way, it's exactly the same capital stack, but the difference is when the investors invest, they only want to have 10% of the control. So some people would say, but that's risky, you don't have all the control. Well, it depends. You see, in the old school way of doing it, you've got more risk. You've got all your money tied up in one basket. In the new age way of doing it, you've got less risk. You've only got 10% of your money tied up in that basket. In the old school way of doing it, you've got concentration. You've got all your money in one building. You've got control, fine, you're in control of it. But when something goes wrong, you have to fix it. You literally have to fly to Australia, fly to England, fly to America, fly to Europe, wherever, and you have to fix it. On the new age way, you've got diversification. You invest in multiple different deals. You've got less control, but ultimately when there's a problem, you've got local investors and they go and they fix it. In the old school way of doing it, you have to be active. And in the new age way of doing it, you can be an armchair investor. You can sit back and let someone else look after it. In the old school way of doing it, it's a scarcity mindset. It's I must control, I must protect my little nuts like a squirrel. In the new age way of doing it, it's abundance. It's about partnership. It's about diversification. Now, do me a favor, take a screenshot of this page, because this might be, along with the other 4 golden rules, one of the most important things I can ever teach you. Because why this is so important is that if you're wanting to diversify, you have to change your mindset. If you want to go the old school route, it doesn't work. And I tried to explain this to my partners for a long time. And eventually we split the company in 2018 because we couldn't agree. We were not aligned. One of the most important things in life is, are you aligned? Because they wanted to do everything from a control perspective. They wanted to go out and own the asset and control it. And I was like, I don't think that works. I don't think you can be an expert in every market, in every city, in every asset. It's impossible. I don't believe it. I believe the only way to do stuff is new age through diversification and partnership. So let me give you some examples here. This is a building in Australia. So in 2016, my old partners flew to Australia. They had a whole investment committee. They had all the things that you're supposed to have. And we were going to build, I think it was 50 units, residential units. It is in Brisbane, and it was great. I mean, the return was like a 28% return. Obviously, you buy the land, you get the planning, you build the building, you sell it, and you make lots of money. Well, they did all of that, and they pre-sold the units, in China, and then China changed the rules. And China wouldn't allow any money out of China for people to invest. So all the pre-sales fell over. So suddenly the construction financing in Australia fell over, because that's how you do it. You get financing based on pre-sales. So that fell over. And suddenly our partners all ran away. And there's 82 investors, me included. By the way, I have $400,000 invested in this building. Now, this is what it was supposed to turn out like. And I was supposed to be a hero, and all of our investors were supposed to be a hero. We got $5 million invested here. I personally have $400,000 invested in this deal. Today, that's what this building looks like. It's a big bloody swimming pool in Brisbane. This is what control is all about. This is the old age way of doing it. So this is a bunch of foreign investors that came over and invested $5 million. And we were told that all the due diligence was done and blah, 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 blah. There's no Australian investors. And when the shit hit the fan, and by the way, no amount of due diligence could have foreseen that the Chinese government was going to change the rules. But it's irrelevant, because if we had local investors, they would have found a solution. But because we're a bunch of international investors, we just got a big swimming pool in Australia. Are you starting to understand why this control thing is so important? If we had diversified, firstly, and not put all our money in one building, we would have had this one problem, but we would have had 9 other successful deals. Plus, if we had local investors with a local partner, then it would have been solved by now, a long time ago. And by the way, I've worked on behalf of the investors to try and solve this. And last year, we got a big Australian, very wealthy Australian family to invest. They're currently going through rezoning and planning and certification and everything in between. And we're trying our best to at least get some of our capital back. The only way to do it, local partners. Here's another example by the same company. They then broke away and they became Allvest. And this is their philosophy. So they like the control thing. So Allvest go out and they buy a medical building, and they bought this medical building. And again, bunch of international investors, they control everything. Well, the problem is during COVID, the sponsor here was collecting the rent from the tenants, but not paying the bank. And so the bank foreclosed on the building. And I invested in this deal, other people invested in this deal, and we lost capital. Again, if you had local investors, this would never have happened. Are you starting to see the pain of these slides? Might just be slides to you, but to me, they're 29 years worth of experience of what doesn't work. Do me a favor. Just type in the chat box if this makes sense so far. This is where, this is not the fun stuff to talk about. This is the stuff where there's two sides to investing. There's making money and there's losing money. And what I'm sharing with you is what you learn and what you avoid to make sure you don't make these mistakes. Whether you invest with me or you invest with anyone else, I don't care. But make sure that you are learning what I'm sharing with you so that you don't make the same mistakes that I and others made in the last 20 years. Because these are expensive mistakes. I've probably in the region of, I'd need to do the math, but probably in the region of 10 to $15 million, where people have tried to do this old school route as a bunch of international investors trying to go overseas, control everything. It doesn't work. It didn't work in Australia. It has not worked in England and has not worked in America. It has never worked. And they always talk about the wins, but they don't talk about the losses. Let me give you another example. So Feldman Equities, the company that I talked to about, we did a second deal with them, and it was this beautiful building. Again, I don't think many of you would have ever dreamed of being able to own a building like this. I certainly didn't. Again, I invested in this deal. Now, what was interesting in this deal is that they had a 2-year fix on the interest rates, and no one foresaw, inflation going through the roof and then interest rates going through the roof. And so when, the whole idea with this building was that they bought it and it was at an 81% occupancy, which means that it's 81% full, it's 19% vacant. Now, again, how do you make money in commercial property? You lease up the building, so you increase the income. That's how you make money. Well, they did that. They did it very successfully. In fact, they got the building to 90% occupancy. But at the same time, the interest rates rose dramatically, and they had to go and refinance. And they couldn't refinance because the interest rates had gone up so much. So they had to do a capital call. And what was so interesting, they'd raised $20 million for this building. By the way, this is a $60 million deal. They raised $20 million. Now, we invested, just to be clear here, we invested $300,000 of $20 million. The partner on themselves put in $7.5 million. Okay, and the rest was all local investors. And what was so interesting is rather than running away like happened in Australia, the partners said, no, we need to put some money in. We'll just stabilize the asset. We'll protect your capital. We won't earn a return for sort of 2 to 3 years while they're waiting for the interest rates to come down. But the moment it's stabilized, you'll start to earn your income again, and then we'll have a proper exit and you'll get your return back. And that's what they did. This asset is protected. The investors still own it. We haven't earned an income now for about 18 months. But when we get the reports on a quarterly basis, they're making really good, steady improvement. Interest rates in America are coming down. Happy story. Can you see the difference between having a quality partner that has large amounts of capital in with local investors? I don't have any control. If they told me they're selling the building tomorrow morning, then they sell the building. I can't control it. I've only got $300,000 of 20 million. But I'm alongside a partner. This is what I call an armchair investor. And this is why it's important to make sure I choose the right type of partners. But when you've got a partner that has this type of track record and has $7.5 million of their own money in the deal, can we agree that that makes sense, that I can be an armchair investor? Because they actually have a far better idea of what to do in Florida. They're in Tampa, if you know America. They have a far better idea of what to do in Tampa than I do. What about this deal? We did this deal in Manhattan, and it was a $14 million deal. I told the VIPs about this yesterday. And they borrowed they raised $8 million in private debt. The partner put in $6 million of their own cash. Our family office, the one that we partner with, put in $1.5 million, and we put in $500,000. So the international investors were $2 million out of $14 million. The local partners put in $6 million themselves, and the local investors put in another $6 million. That, if something was to go wrong, which happens in markets, just to be clear, can we agree that the local investors and the local partners will fix it a long time before I have to fly over there and try and fix a big hole in the ground? Are you starting to see now what I mean by new age diversification and partnership? So do me a favor. Please just type in the chat box, and I would ask every single one of you who's online to do this. Just type yes or no if this makes sense. Because I want to be very clear with you. If you like the concept of control and doing it the old school way, I'm not saying it's wrong. But what I am saying is you're in the wrong place. Because we do diversification and we do partnership and we do it in a new age way. And it is very, very, very important that you understand this. Because one of the most important principles for me in life is alignment. And we have to be aligned. If we're investing together, we have to be aligned in our principles, in our philosophies, and in our values. This is how we invest. We do not invest any other way. Because I've done this for 29 years, and I know that the old school way does not work. People still do it, by the way. I have this every single day of the week. People phone me up and they say, Scott, I want to go buy a house in Leeds because I can control it. I'm like, good luck with that. I've seen this 1,000 times. It doesn't work. But that's each their own. Everyone gets to choose what they want to do with their life and their money. But if you want to work with us and you want to partner with us, this is the way we work. It's very, very important that we understand that. Okay, let's go to risk and compliance. So again, there's cheat sheets where you can go read this on the risk and the compliance and the deal risk categories. There's a couple of things that I think are important here. So from our platform perspective, we're a juristic rep with the FCA, so that's in England. It's a defined financial product. It's got phase protection. There's European cash custody. That's with Lemonway, which is one of the biggest digital wallet providers in Europe. We got multi-layered compliance. We got a transactional wallet, so that means that every deal has its own wallet. And there's data protection and investor ring fencing. So every investor is separate. Secondly, in terms of safeguarding funds, so there's multiple ways that we aim to safeguard funds. The first is that there's external cash custody. So what does that mean? The money is with Lemonway. Like, I can't suddenly decide to go and raid the bank account and steal your money. I don't have access to it. It's with Lemonway. And obviously when I say I, that's anyone in my team. Secondly, there's discretionary portfolio management. So we're a juristic rep under a guy called Michael Carrick in England. And he's separate from our company. So we have to effectively report to him. We got designated investor accounts. So every investor, so in the old days, money would be put in a lawyer's trust account and it'd be managed on a spreadsheet. And you obviously had to rely on the integrity of the lawyer or the accounting firm. It doesn't have that. Every single investor has their own account. You can literally go and see your money. You're in complete control of your money. You can put it in, you can take it out. You're in complete control of your money. Every deal is ring fenced. So in the old days, you could rob Peter to pay Paul. So if one deal was working and one was falling over, they would. That's what they do in funds, by the way. Rob Peter to pay Paul. Whereas here, every deal is ring fenced. So if one deal doesn't work, it can't take down another deal. There's designated corporate members. So that's for every SPV. There are directors. There's external custody of investments. So from an operational perspective, the deals are managed separately from the management team. And then there's operational investor segregation. So again, the investment side of our business is separate from the running the operations side. And what we've done very, very importantly and very consciously, if we were to die tomorrow, like if Wealth Migrate was to disappear, by the way, any company can go out of business. It's life. Lehman Brothers, after 150 years, went out of business. If we were to disappear, you don't lose your money. If you have your money in a fund and the fund goes out of business, then they have to liquidate the fund and they have to try to sell off all the assets before you get any money back. In our case, if we were to disappear, we've put you directly in contact with the investment. You've invested directly in the deal. All that we've done is make it easy and simple and safe, hopefully, to be able to invest. But if we disappear, you still invested directly in the deal. It's a fundamental understanding that's really important. Like, we're helping you invest directly in deals. How do we select and designate our deals? Again, sorry, just before I go to that, again, is this making sense? This is the important stuff, ladies and gentlemen. This is the very, very important stuff. Right, how do we select and designate our deals? So again, when I do the Wealth Going Global course, I go into this in a lot more detail. But in simple terms, there are 4 different levels of risk when it comes to deals. Okay, and this is again not our system, this is the international institutional system. So when you take risk, you've got low risk and high risk. You can see left to right. And on the return side, you've got low return and you've got high return. So the first one is core. Now, core is an asset, like it might be a building in central London with a 20-year lease with a government tenant. It's very low risk, and the institutions love it. It'll generally have low cash flow, but it's very safe. So it's known as a core deal. Then you've got core plus, which is a safe deal, but it might not have all of those attributes. It might be like in America, it might not be in New York, it might be in Atlanta, you know, like one of the tier 2 cities. Or it might not have a tenant that is, I don't know, the American government or the British government. It might have, you know, a medium tier size company. So that's core plus. Then you've got value add. Value add is where, like that building that I told you with Feldman, where maybe you're buying it at an 81% occupancy and they want to increase the value by execution. So they need to put tenants in or something. There's some execution to it. It's known as execution risk. And so it's value add. So there's the ability to create more value, which means you're creating more return, but equally there's risk. And then finally you've got opportunistic, and that's like a new development. Okay, and there obviously there's a lot of execution risk. You know, anything can happen in the economy or whatever. So there's a higher return and there's an expectation of a higher return, but obviously there's more risk in terms of the process. So again, does this make sense in terms of the categories? Because whenever you look at any one of our deals, so if I just log in here quickly, and I'm sorry, I'm just going to let my dog out here because he's scratching at the door. So I just want to log in and I'm going to just share once I've done this, I'll just open the door very quickly. So if you go to any one of our deals, you can see here that you've got what is the deal, you've got the sponsor and, you know, what is their background, and then you've got the risk. And this value add, if you click on this and you come down to a deal here, you can see that you've then got this investment risk category over here. So hopefully I'm just showing you like how to use our system, because there it is there in terms of the sponsor and then even the deal from a risk category perspective. So trying to make it really easy for people. Now, what about tax and structuring? So I get asked this question all the time. And again, people are like, oh, I'm going to go invest in, the Seychelles or the BVI or the Isle of Man or whatever. You need to be very careful when it comes to tax and structuring. You also need to realize that, Garth Wellman, who's the co-founder of the family office, and he said to me, the 1% can pay for advice and get results. We need to support everyone else to get access to the same advice and results. So he actually did a presentation that I've got as effectively a mini course for you, where if you go here to Classroom within the Wealth Hackers, you've literally got the effective tax and structuring. So this is at a high level, but it's very, very hard because every person is different. Okay, so you can go watch this. This is worth over $20,000, by the way, just on its own. And if you join the mastermind, then they will actually do the tax and structuring for you. So no matter where you are in the world, they can help you with regards to your tax and structuring. Now, I've got 3 white papers for you, which I want to give you as a gift. If you're a beginner, the first white paper is the 5 laws of building wealth through real estate. If you're intermediate and now you've owned a couple of residential houses in England or South Africa, whatever, and now you want to go internationally, then the next white paper is the 5 keys to offshore real estate investment. And if you're wanting to build a sophisticated portfolio, then you've got the 4 ways to expand your global real estate portfolio through strategic partnership. And I've given these to you as a gift. So if you go back to resources here, and you just bring up resources, you can see the three white papers are there. Now, I think the chat room must be broken because no one is saying thank you. Guys, we really do try to go out of our way to add as much value to you as possible. And these are gifts that I want to give you. And why am I doing it? The reason being is that even if you never work with us, go and make sure you read those white papers so that you don't make mistakes. I'm happy to share with you the mistakes I've made because it's made me better at what I do. I've got 29 years experience in this space, and I'm going to share with you what works. I'm also going to share with you what doesn't work. And then I'm going to give you white papers and stuff as cheat sheets so that whether you work with us or work with someone else, I don't care. But what I do care about is I don't want you to make mistakes. I want you to get results. So, yeah. And Eleni, I know what you're saying in terms of the overwhelm and processing. I get it. It's a lot. You know, and I could easily do this over 6 weeks and you know, et cetera. I'm always looking for advice on how to do it better because I know there's a lot of information I'm sharing here and a lot of resources I'm giving you. But also I am very consciously saying, I'm giving you all the stuff. You can go and do it all yourself. You can be, let me stop sharing here because I think this is an important moment. You can, you know, the dabblers on here, they've already gone home. So they're already dabbling. They're trying to figure out their next course. So they've already gone. You know, you can be a stressor and you can try and figure this all out yourself. And sorry, just 2 seconds, everyone. So like you can stress, and if you're feeling overwhelmed, like you're probably still in the stressor mindset because you're stressing. How do I learn all this? Scott, this is so much and it's scary and I could lose money. I get it. I've been there. I was there for 14 years. And it was only in 2010 that Tony Robbins taught me a different way. And so there's a pain to this, okay? This is the pain part. If you want to do it all yourself, it can be painful and it's going to be difficult and it's going to be overwhelming. I get it. I've done the journey. I know exactly what it feels like. Or there's a pleasure part, which is that there's a different way. You can choose a different way. You can choose to copy people that are doing it, what you want, or even better, you can partner with them. And I've shown you 3 ways to partner with us. You can walk and join the Wealth Hackers. You can accelerate and jump in a car and join the Wealth Accelerator, or you can join the mastermind and have the family office do it for you. Makes sense? Is it starting to, are the pennies starting? Oh, my whiteboard nearly went flying there. Hang on. Are the pennies starting to drop for you? Okay, let's rock and roll. So, I remind you of the 4 elements to passive income and freedom. The very first one is partners. Everything we've been talking about today is how do you find the right partners? The right partners bring you the right deals, so you get access to the right deals. Then you get the right information, and finally you get diversification. There's an order to this on purpose, because it starts with the partners. You get the right partners, they bring you the right deals, they give you the right information, and it allows you to diversify. And if you do all of that, that's how you get paid. Do me a favor. Type in the chat box. Does this make sense now? On Monday, I'm sure this was just a pretty little picture, but does this now make sense to you as to why and how this all comes together? And I'm asking you these questions because I want this to land for you, and I'm going slowly on purpose. So again, this is the formula that we've been talking about all week about how to diversify. Now I've got a question for you. Who wants to play a game? Who would like to play a game with me? A little game, just to kind of make this land for you. Who would like to play a game with me? Okay, Anna would like to play a game. Anyone else? Anyone else want to play a game with me? Eleni wants to play a game? Okay. So I love this little game because it really kind of synthesizes and emphasizes what we're going through. So just imagine that I've got an extremely direct question for you. And imagine that you've got a serious medical condition. So you go along to the doctor and you've got a serious medical condition. Now, I just want to be very clear. When you meet with the doctor, they say to you, you have to lose 10 to 15 kilos as quickly as possible. Your life depends on it. Because just imagine you're in that situation. Now, I hope this never happens. I get that. This is just an important illustration. However, I remind you again, the doctor says you have to lose 10 to 15 kilos, no matter what, and you have to do it as quickly as possible. And if you don't do it, it's going to have dramatic, it's life-threatening. You've got two options. So the doctor says you've got two options. The one is you go home and you have a home study course. You put a little video on your TV and it tells you to do some exercises and you do this home study course. The second is you have a coach. And they turn up every morning, they knock on your door, and they say, morning, time to do some exercise. And they help you eat better, and they help you exercise better, and they help you have accountability and momentum. Which one would you have more confidence in to get results? Option one, the home study course, or option two, the coach? Which one? If your life depended on it, if you had to lose 10 to 15 kilos, which one would you have more confidence in? Option one, the home study course, or option two, the coach? And I can see there's lots of twos, coach, twos. We all know the honest answer. And so if this is that important to you, what about your wealth? What are you doing in your wealth space to get the wealth that you want? What are you doing in terms of getting your globally diversified passive income? You see, using that doctor's analogy, for some investors, for the super experienced, the sophisticated, the confident, the motivated, etc., we've got just what the doctor's ordered. Again, I've done this for 29 years. When it comes to partners, access to deals, information, and diversification, I've built all the solutions for you. If you want to look at it, under the right partners, you've got access to access class mastery. You can literally go and learn from all the different partners. You can do the home study. You can learn about all the asset classes. You can get to meet all the partners. Two, you've got access to the deals. You can go to Migrate. You can invest. We bring the deals to you. Three, you got the right information. You've got wealth going global. You can go and learn about all the things you need to know between countries and currencies and assets and everything. And you've got diversification. You can invest in multiple different deals, multiple different countries and currencies. You've got it all. It sits right in your hands right now. So the challenge is that for over 2 decades, we've proven that there's a more effective option. And how does that work? Well, that's where we work with you to coach you and to hold you accountable for your wealth system and your portfolio. The problem with coaching is that it's expensive. It takes time. And so how do you do it in a more effective way to help people get results? And that's where I always come back to these slides, the how. And for me, it's simple. You always bring in technology. Just like you've seen the slide already, Uber, Netflix, or Airbnb changed an industry that cut out the middleman, that cut out the costs, and that dramatically increased the trust, the transparency, and the accessibility. Technology does it in any industry. So whether you're talking about investing in wealth or dealing with the family office, you use technology to democratize. And so I've used over 20 years worth of my experience, my coaching, all the personal developments I've done, because we've realized that the financial industry is broken and we want to fix it. We've built the products. You've got access to the partners, the deals, the information, and diversification. But the really interesting thing is that all 4 of these products exist. You've already got them. I've given them to you. But the research shows that according to Harvard, you're going to be 400% better off with a coach than if you do it on your own. So do me a favor. Right now, type in the chat box if you actually have a coach right now. Just type yes or no. I have 3 coaches, by the way. Right now, I have 3 coaches. There's a beautiful little formula that I learned a couple of weeks ago on how to get wealthy. And the idea is that you should have 3 coaches, 2 mentors, and 1 mastermind. And by the way, a coach is someone you pay. So it's not a friend or mentor or whatever. A coach is someone you invest in, you pay. So 3 coaches, 2 mentors, 1 mastermind. Now, what's interesting, I showed you this video yesterday. I'm going to repeat it because it's so important. Let me just make sure my sound is showing, just in case someone said they couldn't hear the sound.
No, this is extremely predictable. There's tons of research around it. Humans change 5 times faster in groups than they do with a one-on-one coach, consultant, or therapist in that case.
Wow.
So I started looking back at business models and people who had done this effectively over the generations. Masterminds aren't new, folks. They're not new at all. People have been doing this for thousands of years. And when you put a collection of people together who are all committed, all driven, and all so want to make the right changes happen, and you give them a leader to follow who's willing to get in the trenches with them, all of a sudden you start finding real, rapid life or business transformation.
So again, I shared this with you yesterday, and I'm doing it again because repetition is the mother of skill. If you're on your own, so if you're over here on your own, and let me stop sharing quickly. If you're over here on your own and you're trying to do everything yourself, okay, there's some really interesting stats. If you have a coach, according to Harvard, you're 400% better off. So you're 4 times better chance of getting results than if you're on your own. If you're in a mastermind, you're 5 times better than having a coach. Now, in terms of simple maths, 4 times 5 is 20. So you are 20 times better being part of a mastermind than you are trying to do it on your own. Are you starting to see the science of success? And you get to choose. Am I going to do it on my own, like I've always done? Am I going to get a coach? Or am I going to join a mastermind? At the Wealth Hacker level and at the Wealth Accelerator, you're getting a coach. At the mastermind level, you're obviously joining a mastermind. It's really interesting, the stats. And I ask you how badly you want to succeed. So the question I have for you is, do you want to get out of your comfort zone? Everything I've been sharing with you for the last 4 days, I'm sure, is taking you out of your comfort zone. But the question is, do you want to get out of your comfort zone? And I just want to share this so you can see me better. No, wrong slide. Because when you get out of your comfort zone, that's where the magic happens. And that's why we built the mastermind. Now, I went through this yesterday, so I'm going to go through this just quickly for you. But the whole focus of the mastermind is to build globally diversified passive income and portfolio growth. It's to literally diversify across countries, currencies, assets, partners, and time, and to build passive income. And what we do is we get clear on what you want. We get very clear on where you're at. We help build a plan to get from A to B, and then we hold you accountable through the process to execute on the plan and get results. It's a collaboration. We call it Private Wealth Global, between ourselves and our family office, and it's all about getting results safely and simply. We literally follow this 9-step process. So phase 1 is all about the setup, getting you set up. You sit with me, you get very clear on your vision. What are you wanting to achieve? We get you set up on the platform. We also understand your investor profile. Who are you at a personalized level? What are the right type of investments for you? Why have you made mistakes in the past? This is about knowing you personalized. By the way, it's trademarked. You can't get it anywhere else in the world. Then we go into planning. This is where you sit with our family office and they do a health check. They look at your tax, your structuring, your pension, your portfolio, your property, your private equity, your crypto, whatever you got. Then they optimize your portfolio. This is about protecting your capital. It's about making your money work hard for you. Rather than you work hard, your money works hard for you. It's about legacy planning. Now your planning is all done. Now it's about execution. This is where you work with me from an accountability perspective and the team to get results. We work with the family office to bring us the latest information, and I bring partners in every month. So you're learning and growing every single month in your wealth and investment space. And then it's about investments and results. 9 steps that literally the family office do that we use to copy. You've got access to the exclusive learning community platform, and you've got access to the exclusive investment opportunity. And if you want to apply, and we're going to pivot now where I'm going to play you a video from Cynthia. Now, Cynthia is a teacher, and she literally was divorced. She had 3 kids at school and going to university. And she was, for 4 years, she was in analysis paralysis. She had no idea what to do. And so many people sit around, they say, oh, but I can't do this. I'm not wealthy, or whatever perception people have. And Cynthia, as a teacher, did it, and she managed to get a result in 30 days. Wouldn't you like that? So I'm going to play that video for you so you can literally watch and learn from Cynthia. Because if Cynthia can do it, you can do it. And while we're doing it the entire time, this diversification mastermind link, I'll put in the chat room. And at any point, you can go and sit down. And if you really think this is for me, then do the priority. Come and meet with me. We'll figure it out. And you go into the queue in a priority, line. If you're not sure, still go to apply. Meet with Alex, and you can make a decision. Because, we started on Monday talking about Jordan and everything Jordan had, from passive income, simply and safely, diversifying across countries, currencies, and assets, getting effective results, getting the right knowledge, having wealth protection, plan B, and peace of mind, having someone hold them accountable, family office, generational wealth plan, and getting results. 4 days later, hopefully you can see exactly how Jordan has done this. Or what about Victoria, where she literally said she wants a streamlined investment strategy. She wanted to feel empowered to make the right decisions, and she wanted financial freedom. Hopefully you can see exactly how she did it. But some people say, well, I want what Jordan has, and I want what Victoria has, but I don't feel like I'm worthy of that. Well, Cynthia was a teacher, and she literally said, thank God for this mastermind, the partners it brings us, and the exponential learning curve. Who would like to watch a quick little video where Cynthia explains her, well, it's not that quick, actually, it's about 15 minutes, but where Cynthia explains her personal experience, because I think there's so much power in real people, real stories. Yes or no? Okay? Would you like me to share Cynthia's story? It's an interview I did with her, and the reason I love it is because it gives people the self-belief that if she can do it, I can do it. And once we're done with Cynthia, I'm going to play you another interview I did with Selwyn. Now, Selwyn, by the way, has a PhD from Cambridge, and he actually runs the due diligence at the private equity firm. And he's going to talk through how he selects his partners. So I've not only taught you the theory today, but I'm going to bring in our partners to show you how they do it. They manage $1 billion. So let's start with Cynthia so that you feel like you deserve to be in the room and from a self-belief perspective. And then secondly, if she can join the mastermind and get results, then I fundamentally believe you can. And then we'll go to Selwyn, who's going to finish off for today and share with you what I believe is one of the most powerful interviews I've ever done on how $1 billion investment fund makes decisions in terms of the right partners. Sound good? Right, let's pivot into Cynthia here quickly. Enjoy this. I really, really love this interview with her. And where's she gone now? Here it is, where she shares her story. Enjoy it. I know people have really resonated with Cynthia since they've watched this video. So Cynthia, thanks so much for joining us. I deeply appreciate you jumping online. I was hoping for you to be there live next week, but you're off to Paris. So sounds like you've got an exciting trip organized.
More rugby. Can never get enough.
Fantastic. So you've got a confusing accent for everybody. You've got an American accent, as I understand, did a huge amount of business in Hong Kong and now live in Italy. Tell us a little bit about yourself, just so the kind of people know who you are.
Yeah, I'm an American. I graduated from college and spent 10 years in New York City in the advertising profession. And during that time, I kept putting on a backpack and leaving and traveling around a part of the world and putting on a backpack and leaving. And the third time I did that, I backpacked around Asia and ended up in Hong Kong permanently, ironically, to watch the Rugby Sevens. And I rolled into town to watch the Rugby Sevens, and I stayed 10 years. And during that time, I worked in marketing in China. So I continued my profession. And relevant to this conversation, I took my first year's salary almost, because I was running around with backpacking money, $100 there, $100 here. I took my first year's salary and just banked it into what I thought was a mutual fund. It was something all the expats were doing. And then I just left it for 25 years. And I worked in Hong Kong, and I met my husband and had 3 kids, and we didn't want to raise them in Asia. And we decided to move to Italy. He was English, I was American. We decided to move to Italy, got to Italy, and started renovating a big house. That was a big money sink, and went into olive oil picking, olive oil making. So farming, that's a big money sink, as all the farmers in our mastermind know. And so I ended up here separated from my husband, with not having worked for 15 years, because I'd been a stay-at-home mom and an olive oil farmer. And that's how I ended up. That's how I ended up finding you all. I think I took Scott I took an online course. It wasn't even an online course. It was one of those Jeff Hayes film productions, like Money Matters or something. And it was just
money revealed by Jeff Hayes.
Yeah, Money Revealed. And I met you on that, or I listened to your speech on it, about how property was the last bastion of the wealthy, and that's sort of one thing that the average person doesn't get into. To get into property back then, 20 years ago, you needed to have a lot of money. And you talked about how you wanted to make people with $100, $1,000, eventually, $10, be able to get into that. And it always stuck. And I didn't see or hear from you again for 5 years. And then I think Wealth Migrate came up on my radar, probably some social media radar. And I jumped on it. And that's how I found you all again.
And what sort of challenges were you facing at the time? Like, what problems and challenges? We all, there's a great thing that we move 5 times more away from our problems than we do towards our pleasures. So we tend to take action because of problems, not pleasures. So what were the problems or challenges you were facing?
Yeah, the problem was huge. The problem was I'm living in a foreign country. I can't go back into my old career, which was China media, because I'm living in Italy. I had 3 kids to feed. I'd left my husband. And I was like, where's my skill set? So I was actually at the stage of like, just how do you put food on the table? And I, found a place to live, suddenly had 5 income streams, and all 5 of those income streams dried up during COVID. And it was the first time it hit me that I was working for money, selling my time for my hours for time, and that my money wasn't working for me. And COVID and that incident and that realization happened at the same time that 20-year fund came to maturity, and I suddenly had a chunk of cash. It wasn't a lot of cash by any means, but you got to start with what you start with. And I was in that frozen position of like, what do I do with it? Like, I need this money to work for me, because I'm over here scrambling to find a job and to put food on the table for the kids. And I didn't have any debt. I was fortunate. I owned my own home. I owned my car. I didn't have any credit card debt or anything. So in that way, I was lucky. But I was really at that paralyzed, what do I do? What do I invest in? I've read enough, read The Motley Fool every week for 30 years. I thought I was relatively financially literate, but I was frozen. I was just like, what do I do with it? Because No, I was just saying, it was just at that age, where my kids are 20, they can make fiscal mistakes. And I was at that age where I felt like I don't have another, ride it out 20 years, and the stock market always rebounds. I don't have another 20 years to ride it out. Like, I had to do that's what my fear was.
A lot of people talk about wealth protection, and that's what I'm hearing. It's one thing to grow your capital, but you also want to protect the capital you've worked, so hard to create over the years. Why did you choose to work with us? What was it that attracted you?
I I had finally found people that were exactly like me, like from multiple parts of the world, maybe dealing in multiple currencies. We have, some gentlemen in the mastermind that might be South Africans. They're living out in New Zealand. They, the typical, the old fashioned five flags. You live in one country, you earn money in another, you've got a bank account in a third, you pay taxes in a fourth. And it doesn't really exist anymore. But it was very hard to find like-minded people who understood different parts of the world and who naturally understood diversification. And the mastermind narrowed that down and made it even more specific, diversifying across time and currencies and assets, is even more focused. But just the general idea of diversification. I mean, all my European friends just invest in European things, and all my American friends just invest in US things. And a lot of my Hong Kong Chinese friends are heavily invested in China and the BRICS economies. So I really liked that. And then I liked the overall philosophy that we were trying to make what's available to the 1% available to the average person. And that really resonated with me, because no matter how much you learn, you're always thinking, what's that little bit I don't know? What's that part of the puzzle I don't know, because I'm not, a high net worth individual.
So tell me, in terms of, you took a leap of faith. We've all done this, where it's like your sort of intuition's telling you to do something, but there's a cost involved, and you're like, I don't know if this is going to work for me. And what's been your experience? I mean, we've been on a journey now for the best part of nearly 12 months, actually. And what's been your experience, being part of this diversification mastermind?
This diversification mastermind was different from every other sort of course or challenge or, I don't know, group I've ever joined, because it took you from the philosophy of how you're supposed to be investing and actually provided us with answers. So it took us from, it's not just, I didn't need the mindset stuff anymore. I felt like I was already there. And it took us from the mindset right to like, well, here's some ideas that you can invest in. And, let's all jump into this together. And if you're not going to invest in what we're providing, here's some other experts in different asset classes who you can go buy a promissory note from, or go buy an EFT from, or go talk to someone in a private, what do they call it? The family management, family asset. What are they called? Yeah. So you provided us, you weren't trying to be all things to all people. It was like, I'm Scott, I'm the property guy, this is what I know. And I'm never going to try and sell you a commodity. And I'm never going to try and sell you stocks and bonds, because that's not what we focus on here. But if you want those things, here are those experts that we're bringing into play as well. So I liked it that it was, it was holistic. Everybody sort of knows what they know, and that we draw on the experts in each related field for people to either choose to work with or not. But so you got that learning curve, but you also get that ability to, to execute and make investments with where you want them.
I think what you just said there is so important. It's the execution. At the end of the day, we got to get results. And, there's absolutely no point in getting more knowledge. And, it's that whole saying of people think knowledge is power. And it's rubbish. Applied knowledge is power. So, one of the things I love about your story is that, you've gone and met with Callio. So, again, I would have talked quite a lot about Callio already, but, most people don't get access to a family office. A family office is literally for the super wealthy. They manage $600 million, only 60 families, but through an alignment of interests, actually. So they believe in, helping everybody get access to the same information, the same opportunities. And because of that, they agreed to exclusively work with the mastermind. And because of that, you and I have got access to their skill sets. Talk us through your experience with Callio, because it's been an interesting one to get your feedback.
Callio is phenomenal. You have a half an hour free Zoom meeting with them, and with the president in the room, not just someone who's going to execute. And they say, "What's your story? What are your needs? What's your financial situation?" And I pulled up that matured fund that I had and said, I need to invest this, but I don't want to, I can't invest it for the long term. Here are my needs. I have immediate goals. I have 3 children that have just gone off to college. So I suddenly have immediate financial goals that I'm not going to be able to meet if I keep just relying on my income or selling time for money. And they listened. They asked really smart, relevant questions I wouldn't have thought of, but they were particular to me. And I didn't feel like I was being put into a box of you're this type of investor, or you're this type of investor, or you're this type, And it wasn't just the like, are you high risk? Are you low risk? It was really they really tried to understand my needs. And within 24 hours, they had a proposal to me that said, here's what we're going to do to get you money right now. And then here's what we're going to hold off on and keep discussing and think about and get you into eventually. But here's what we're going to do to solve your immediate problem. And within 1 month, I had income coming in from an investment from them, which just liberated me. I mean, it was just the buffer I needed to not panic about money anymore and to make the rest of the decisions slowly and, from a different mindset.
It's so interesting what you're talking about there, because the most of us just go along, we meet a financial planner, they put us in a box, we stick our money into something we don't even know what it is, and we don't get paid an income. We get promises of long-term retirement, but we don't get an income. And what you just said there is within 1 month, you got income back in your pocket. Now, in my belief, income is freedom. So, and I mean, I know for you, you don't need to go into the personal story, but even then, I mean, it had a dramatic change for you in quite a quick space of time to give you that peace of mind,
A huge space of time. I mean, I'm an online English teacher. The year after COVID, the Chinese government banned all English teaching online. And I went from a 7-day-a-week job to nothing, to zero. And it was, and given that it's China and China's unpredictable, there's always those undercurrents and those rumors among online teachers. They're going to do it again. They're going to do it again. But having that financial buffer means to me that if it happens again and China locks out all online teachers, I'm not going to be sitting here with zero income. I mean, it's a safety net that's just unbelievable to me, that someone who is not by any means a high net worth individual can have your money working for you, can have my money working for me, and give me that peace of mind.
Yeah. So tell me, 12 months ago, you could have been like so many other people. And again, thousands, I don't even know, hundreds of thousands of people have watched me present over the last 20 years. Most of them sort of hear it and don't do anything. 12 months ago, you heard it, took action. If you hadn't have taken action, how would the last 12 months have been in your mind? Like, what would have been the difference?
I can definitely tell you I would still be sitting there with that matured mutual fund in the bank account or pension fund doing absolutely nothing, because it matured 2 years before or a year before I met you all. And I was like, right, get this invested. This was, it was the number one goal every month. Get this invested and doing something. And I just didn't know what to do. I had so many ideas and so much information coming from me. And that's where I was 1 year ago. And, within 2 months of starting the mastermind and, 2 weeks of meeting Callio, that money was invested and working for me. And I honestly believe that if I hadn't found you all, I'd still be sitting on it. It would still be doing nothing. It would still be sitting in a bank account waiting to be invested.
Yeah, no, that's brilliant. Or maybe worse, given to a financial planner being eaten away by
to lose more money over 20 years, right?
Yeah, exactly. Yeah. Tell me, why is this different? There's lots of masterminds out there. I mean, there's a plethora of information on the internet. Why has this been different for you from, your other previous experiences?
The fact that our philosophy is we're all going in the same direction is wonderful. But I think, certain segments of our life, and when you go into that initial conversation with all of us masterminders, you're breaking down what are our personal life goals, what are our financial goals. Life is more than just finance, but finance is one of those highly emotional, people have a hard time talking about it. It's not polite to talk about money. Maybe we don't discuss it with our best friends, but the mastermind is that one place I can go to where we're all talking about money. It's allowed, it's the purpose of it. And it's that space where we all throw out our mistakes. You've shared with us, I tried this and this, this is what happened to this property and this didn't work. We all can throw out our situations, and we're just all in the same space. We're all in that, let's talk about money, let's learn as much as we can. And, what are the next steps? What are we going to execute for each other? And it's just such a nice space to be in, because you can go out in life and maybe not even talk to your spouse or your best friends or your brother or your kids or your about money. And it's just that space, because it's such an important part of our lives. And it's that space where we all have permission to do that. And we're all going in the same direction.
Yeah, no, I love what you said, and I think there's so much power in collaboration, and again, just simple metaphor: birds flying in a flock can go 70%
Yeah.
further. So
Yeah.
unfortunately, I know that I don't know if you were the same, but certainly myself, I was trying to do it all on my own for 14 years.
Yeah.
Like, this was like, I'm getting nowhere doing this strategy.
Right.
Tell me last thing, if someone's sitting they're sitting here, they're watching this, and they're sort of saying, it sounds too good to be true. I don't know, like, what should I do with my life? Have you got any advice like to them? You've been in that situation. What would be your, advice, recommendation? We don't get financial advice.
I think the problem is that if you've made it this far in either the Wealth Migrate platform or the Wealth University you've done, you're already an intelligent person, and that almost works against us because we go like, I'm smart, I can do this, but oh my god, EFTs, all I have to do is Google like top 10 EFTs, or jump onto one of those crowdsourcing platforms or something. I can do this by myself. And I think it's almost a hindrance being somewhat financially knowledgeable. I mean, it's almost a block, because you get to that, yeah, I've taken the course, I've done a challenge, I can figure it out from here. But there really isn't anything like finding the partnerships that we have in this group. I mean, there is no way, for all of my love of reading financial documents and being on financial websites and blogs, there isn't any way I would have ever found the partners to invest with and to invest in without being in this group. There's just no physical way I could have ever, industrial buildings in Texas, or healthcare centers in Brisbane. How am I going to find those sitting here in the middle of Europe? So yeah, I think the partnership is the number one reason to join the mastermind. It's not just about the knowledge, it's about how do you execute, but you can't execute unless you have the deals in front of you. And you can't have deals in life, in any aspect of life, unless you have good partners. And it's a partnership that I would highly recommend people to, it's worth the entire investment. Yeah. Is the partnerships abroad.
Well, thank you so much for your time now. Thank you for sharing. Right. And for me, the thing that I'm most grateful for with the mastermind is the amazing community that we've got. And you're one of the stalwarts that are leading that community with your energy and everything, which I deeply appreciate. And I love what I love most about your story is that most people assume that everyone's like uber wealthy and got millions of dollars and highly sophisticated and whatever, and we're not. You and me are not like that, and yet we can get access to the same knowledge and the same partners. And the thing I love most about when you shared with me your story, it was like, well, look, I've listened, I've acted, and look at what it's given me, and in quite a short space of time. And I think I just deeply appreciate you sharing that with people, because hopefully it can inspire others to get the results for themselves.
Yep. I would say jump. I mean, when I think of where I was 1 year ago, it's a million miles away, and not just because I have income coming in, but knowing what my next steps are. Like, I know where I'm going. I know where the next chunk of money is going to go into. I know what, I want to invest in. I know what I don't want to invest in. And I know the partners that I want to do it with. And that's just a huge weight off anybody's, financial shoulders.
Awesome. Well, we look forward to further results from you. Thanks so much.
Good. Thanks, Scott.
So what did you think? I always love sharing that video because hopefully it gives you hope and belief that, if she can do it, you can do it as well. So yeah, let me know in the chat box. What did you think? Does it make sense? In terms of the process. So again, what did she say? Well, thank God for this mastermind. The partners brings us in the exponential learning curve you gifted us, and you've seen the video. So you all sort of understand now the value ladder. You can get started with your Wealth University. You can walk with Wealth Hackers. You can jump in a car with Wealth Accelerator, or you can join the mastermind and jump in the airplane. Now, I've shared with you the link, and you basically, in terms of, you all got the link, I put it in the chat room, or you can just go to diversificationmastermind.com. What I want to share with you now is a partner called Selwyn. So Selwyn is one of there's two partners that run the private equity firm. He's one of the two partners. You can see that you've got Glenn and you've got Selwyn. And I do an introduction in the video, so I'm not going to repeat it, but there's just a couple of things that are important here. One is he's got a PhD in mathematics from Cambridge. Glenn is also a chartered accountant. Selwyn's a CFA as well. And these two people have over 20 years experience in the institutional space, in funds, in private equity, in real estate, property, etc. And while you're watching this and you're thinking again, today, if you're feeling overwhelmed, you're like, oh, wow, this is so much stuff. I have to go and do it all myself. No, mastery is about partnering. And so let's see what we can learn from Selwyn. Who would like to watch the video from Selwyn where I interviewed him on how do you invest? What are your principles around partnership? How do you make the right decisions around partnership? And I wanted to share this video with you because it's very, very powerful in terms of, these guys manage $1 billion. And if they're doing it this way, then I think you and me can learn quite a bit from them. So let's get Selwyn live. And here Selwyn is. Enjoy. And once we're done with Selwyn, we'll wrap up for the day and we'll pivot into tomorrow. That is the most important day because it brings it all together and you walk away with a plan. But I would strongly recommend that you watch this interview with Selwyn because this is how to truly do partnerships and manage risk. Selwyn, it's awesome to have you. Thanks so much for joining us. Sorry, it's wonderful to have you online. And just before we get started with you, I wanted to share with people a little glimpse into kind of you guys' background. So firstly, in terms of Callio Private Equity, I just love this, the front of your website, where it's literally communities are more powerful than networks. We're going to talk a lot about this today because, I always say the number one way to manage risk is the right information and the right partners. And how do you do that? Well, it's about getting access to the right networks, basically, you know what I mean? And what you guys do is take it to the next level, which is community. And it's really what we're doing. I mean, on this thing, this diversification challenge is a community of people. At Callio Private Equity, we aim to build and grow community through our investment and advisory activities. We bring it together like-minded individuals and companies that exchange resources and advance ideas, deepening the solidifying relationship of trust. And if I go to team, just to give a little bit of an introduction to Selwyn. So there's two partners, Glenn and Selwyn. So Selwyn has over 20 years of experience consulting and banking locally and abroad. He began his career at McKinsey & Co. in Johannesburg, undertaking projects across Africa. He subsequently co-founded and managed RMB's opportunity in real estate in the global real estate portfolio, and later co-founded the RMB Westport Real Estate Development Fund, the largest sub-Saharan and real estate private equity fund at the time. Prior to joining Callio Private Equity, Selwyn led ABSA's commercial property finance business in Africa as a principal for the ABSA Group. He currently serves on the board of trustees of the African Leadership Academy. And if you don't see it here, he has a PhD, which is a doctorate in mathematics from Cambridge University, which is pretty impressive. So without further ado, Selwyn.
You sound a little bit like my mom, but I appreciate that.
Well, someone has to tell people you came from Cambridge. When we're talking about risk and due diligence, I want people to at least kind of have a bit of a sense of who they're talking to, if that makes sense, in terms of it. So let's get started. And before we go any further, just tell us. I mean, I've read your bio. No one ever likes to brag, so I do it for you. But tell us just a little bit about your journey. I mean, really, you can see you've got a very extensive journey in property, in real estate, in funds, in private equity, etc. Just talk a little bit about it. How did you get into it? And just so people have an idea of who's in the room.
So Scott, I mean, you've read out my bio. I started as an academic and realized that wasn't really an expression of myself. I didn't want to be in research and I didn't want to be stuck in an institution. And the best way for me to get diverse experience in commerce was through consulting. And when I joined McKinsey in Johannesburg, it was the fastest growing office in the world, McKinsey's fastest growing office in the world. And we had very diverse clients and very diverse projects in operations, strategy, organization, capital planning, and so on. After being there for a few years, McKinsey has gone through phases, as people on this call would know. I joined RMB, and that was actually life-defining for me, joining RMB. My current partner, Glenn Scorgi, was one of the first people that I worked with when I joined RMB. And in your point earlier, I'm actually glad I joined a little early and was able to listen to what you said.
I'll just share here just so people can see. This is Glenn, who someone's referring to. So
yeah. So Glenn and I started to work together in 2004, I think it was, when we first traveled together. We were looking for opportunities. We had a relatively open mandate. The banking world was very different in those days, much less regulated and constrained than it became after the global financial crisis. And what I loved about the banking world is something that I've retained in private equity, and that I think speaks to your audience, Scott, speaks to the people who are here. And that is the sense that your risk is the risk that you see. Consulting is always 1 degree removed. You're telling people what to do, you're giving advice, and then you walk away. You leave your PowerPoint presentation on the desk, and you get back into your fancy car and drive away, and then go to the next client. With and particularly the R&B culture as it was in those days, you are very well aligned with the bank as your principal investor. And Glenn and I ran a principal investing business, and then later on went into funds and into property and into various other areas inside the bank, but always having that particular philosophy. So I think the journey for me is having found that world where you're very well aligned with the people that you work with the people who supply you with resources, with capital in particular. I always wanted to stay in that. And obviously I moved in banking and developed an expertise in property, but I've always liked the idea of being a generalist. And Glenn had developed a relationship with Garth, who you mentioned in your presentation as well, Scott. They were kind of social friends, and and Garth wanted to build the capability in Callio for Callio to do private equity in a I think a different way. Just to dwell on that for a moment. Private equity investments are often presented as investments into funds, and the traditional private equity managers, the famous private equity managers that are out there, Apollo, Cerberus, Blackstone, and so on, those managers manage giant funds. Glenn and I had both been investors in funds on behalf of R&B and had managed funds on behalf of R&B. And we didn't feel that fully captured the idea of alignment that we wanted with our investors, the idea of a fund. And what we do in Callio Private Equity is direct private equity. That's our core business, it's direct private equity, which is individual transactions or individual investments matched to groups of investors for that investment. So, for example, investors who don't like a particular sector or who want to be more offshore or whatever it is, we can offer them investments that make more sense for their portfolio or for their levels of interest. The other thing that we realized would be very powerful is what you mentioned, Scott, which is the community side. Callio has a family office and a wealth management business. It has clients who, many of whom have been in business or are in business and have networks and links of their own. We don't really like the idea of networking in the sense of, attending cocktail parties and doing that kind of thing.
Just by the way, that's the biggest load of bullshit I've ever heard, where you walk around and hand out your business card.
Yeah, you hand out your business card.
It's literally like poor man thinking. Like, it doesn't work. Trust me.
It doesn't work. It doesn't. So the deepest due diligence that you can do on your partner is just knowing them, or knowing somebody who's been in business with them and seen them operate under different kinds of circumstances, and somebody who can vouch for their integrity. So many of the people that we invest in are people that are part of the broader Callio community or our own personal networks, in the sense of we know people who've worked with them, or we know people who've invested with them, and many of our opportunities come through that kind of channel. And I think that's very powerful.
By the way, sorry for butting in. I know people hate me doing it, but I'm just trying to give context to people. Remember to everyone who's listening, remember what I just said literally half an hour ago. What he's talking about is you test people's character not when it's working, it's when it's not working. And that's the power of knowing a relationship, because everyone tells you about all their wins, but they often don't tell you about their losses.
Yes. So, and for me, the best example is actually my own business, Callio Private Equity. So why is it that after working with Glenn in the early 2000s, mid 2000s, We went our separate ways just because of the way things evolved in R&B and the property businesses and so on. And then we joined together. Glenn and I lived through the global financial crisis together. And we were very, very heavily exposed in our portfolio to that. We managed a portfolio of with assets of over $250 million. But it was exposed to the property sector. So it was the most heavily hit sector during that global financial crisis. But I could see how Glenn worked. I could see how I worked under those circumstances. And you can build a rapport, and you can now build that level of trust, which is so fundamental. And if I look at the investee CEOs that we work with, not all of them have the same level of capability, or to be completely blunt, the same level of integrity or alignment with us. But the point is that we try to find people who will have that alignment. And in situations where they're facing adversity, we'll do the right thing. And at least we'll think through the process with us aligned with them. So to give you an example, and I think Scott in various other presentations, I think Glenn might have presented to a different audience, but Awesome Business Finance, which trades as backed in Texas. Glenn and I were visiting that business last week. The CEO, through COVID period, said he would never stop paying interest to our investors. So we actually offered to him and said, we're pretty sure your business needs liquidity in a time like this. So we're happy to approach our investors and say, you're not going to be getting your interest payments. We felt that might be the right thing for the business. And he said, no, he didn't want to do that. He felt the correct thing was to maintain a 100% track record with us and with our investors, even if that meant making a personal sacrifice on his side. And he was able to trade through, and the business has grown and actually grew through the COVID period. Other competitors went out of business, had to be resuscitated or bailed out, but he was able to do this. And I think he took a risk, but the point was that he wanted to ensure both that he was aligned and that he communicated to us that he had that alignment with us. So I think, Scott, your various comments very pertinent. In our deal making, we try not to be the majority. We want to make sure that management and the people who are going to be required to deliver on the investment thesis.
I'm being rude, but I'm just coming back to this, like what I call old school mentality, new school mentality, because old school is, and by the way, Glenn did an incredible presentation last week to our mastermind was about private equity, and I'll show you some of the slides. Again, people have access to get asset mastery should they want. But the point being is that the old school way of doing it in business or in property was to go and buy the whole thing, okay? And the first time I ever learned about this, ladies and gentlemen, was actually my father. So my father was the financial director of Rainbow Chickens, and he said that Rembrandt, that's one of the most wealthy families in the world, came in and bought 40% of the company. And now the old school mindset is, no, but I must own more than 50%. I must be in control of the company. And then a couple of years later, my friend works in England for a company called Strand, and they're a private equity firm, funny enough, as well. And they got bought out by a big family, and this family, the Hanson family, bought them for 40%. I thought, shit, there's a pattern there. The wealthiest families in the world are buying 40%. Why are they not buying 51%? Because we're all taught to go buy the whole thing and we must control it and whatever. And the point being is that that's an old school way of doing it, because if you control it, you have to manage it. And then, interestingly enough, literally last week, Glenn said, no, we're into conscious capital, and we'd much rather the founders and the owners of the team and, whatever, have the majority, because then they're going to get out of bed every morning and worry about it and getting it done versus you getting out of bed every morning and worrying about it. So I'm jumping in, Solomon, but I'm just trying to give context to my little picture that I drew here. Basically where you're going,
Yeah, that's exactly it. And then the other component is often leaving space for other key employees. So yes, the founder, manager, it's often also other people who are needed to be aligned and who need to have the same kind of orientation. So we're very keen, like in our contracting, we're very keen being on the remuneration committees of the companies that we invest in, both to avoid the conflict that you have with the CEO founders, but also to manage that next level, to say, who else is important here? Are they correctly incentivized? Are they locked in? Is there the correct protection for the company and the correct alignment for that employee? So to try to understand how value is being delivered, and knowing that as an investor, you are bringing a particular kind of value. You bring risk capital, but you're not bringing operational capabilities. You're not bringing market knowledge or anything like that necessarily directly. You sometimes can help, and I think we do help our investees. And we often intervene when they want us to intervene, and they'll say, can you help us with this? Can you talk to the bank for us? Can you sit on this call? We've got this issue with one of the other shareholders. Can you help us? We're always available to our investees to do those kinds of things, and to investee CEOs and founders. But we're fully aware we're not able to do what a CEO does day in and day out. We're not able to do what a management team does day in and day out. And we're deliberately if we could run, one of our investees, we would, rather than our current job. But we actually believe that our founders should be the best at running their own businesses, both because they should be fully aligned, but also they should be developing their knowledge as they go, as they operate, and they should have entered with a particular understanding of their business, which obviously we test. Yeah. So, yeah, to go back to your original question about personal journey, I think for somebody like me who feels that they're a generalist, wants to be involved in quite a few things, likes the interactions, which are, I think, meaningful interactions with partners. This is a very good job that I have. And I'm able to speak to CEOs about something that's very fundamental to them. In many cases, I'm able to help them, and our role in their lives is actually quite fundamental. And we do have investees who are very thankful for the way we've approached things. And we've actually had people seek us out saying, I know I can get the money somewhere else. I could probably get a better deal somewhere else, but I'd actually rather have somebody who wants to relate to me when things are not going well, will understand that or help me intervene in a positive sense. So that's the conscious capital side, in terms of not just in terms of the final end goal investment, but also in terms of how we operate those investments and how we make those investments on day one.
Yeah. So let's go. I want to share my screen here quickly, and we're not going to regurgitate everything that Glenn went through. So Glenn did this session for our mastermind, and like I said to you, every month we go deep into one asset class. And Glenn, actually, funny enough, literally this month of October, did the private equity one. So again, you can get this as part of asset mastery. But what I just wanted to talk about a little bit was just the asset class of private equity, because some people confuse it in terms of what is it, etc. And in simple terms, it sometimes gets confused, but private equity is where you invest in a company, but it's a non-listed company, so it's a private company, and it can also be a property deal. Like, we're going to talk through some real opportunities now, so people can get a sense of it. But just from your perspective, Selwyn, how would you sum up private equity?
Yeah, I think you've already summed it up. So it's a massive asset class. Normally when they show private equity or the size of private equity, they're only talking about those things that show up in formal funds. But if you think about it, almost every business, any business that is not listed, is a private equity business, in the sense of operating outside the public listed markets. So it's a very wide range of potential investees. And it's our area in private equity is a little bit above venture capital, but certainly below what we would normally classify as buyouts or mergers and acquisitions. We invest in what we call growth. So it's the supply of capital to businesses that want to grow, and for whom the best form of capital is equity capital and long-term permanent capital in some other form, potentially permanent debt even. So that's how I would classify our version of private equity.
Brilliant. And I think, again, I'm not going to go through all these slides, but going through this whole presentation, there was like, what are the different returns? How do you balance risk and return? There was talking about private equity in 2022 and where the opportunities were. It was talking about the Callio private equity team and taking it to extend more around what Selwyn has already spoken about and what differentiates them. But what I wanted to do was actually to pivot, and I want to start talking about some using a deal as an example to kind of talk about kind of risk and partners, because I kind of want to get in. So as an example, this is an opportunity that is literally becoming available as we speak. It's one of the ones that you've done a lot of due diligence on, but let's not use this as an example, as a case study for kind of the type of thinking that you would go through in terms of risk and due diligence. So let's just say now I want to be in American property. I personally have been wanting to be in it since 2010. I've been wanting to get into Manhattan for my whole time, and I've never once been able to invest in New York, let alone Manhattan, because it just never found a way to be able to do it, never found a partner on the ground. And so talk us through, Selwyn, the process you and Glenn go through in ascertaining a market, finding the partner, doing the DD on a deal, and determining, yep, this one's good for our investors.
So this is actually a fantastic example, Scott. So one of the sponsors of the underlying transaction for this Catherine Street transaction in Manhattan is somebody called Duncan Randall. Duncan and I have known each other. We were for over 20 years. We were together in McKinsey, and we served on the same team and landed up living in the same house for several months, serving a particular client. Duncan is married to an American. He's lived in America for several years now, and he's built a property business using his own money and money from other investors. He had previously been a private equity operator in South Africa. He was one of the founders of Tana Africa, which is funded by the Oppenheimer family and a sovereign wealth fund from Singapore. So here is somebody that we know very well. Duncan knows that we have an investor base that is interested in these kinds of assets. He has shown me personally transactions. Before I joined Callio Capital, I invested with him myself. So I have a sense of how he's operated. I know how he's operated through difficult times like the COVID period and how he's been able to manage assets. He actually approached us and said, this is what's going to come available. I want to structure a deal which will allow your investors to invest into this debt. There are other people in his network that he's offering this to, and so we had we had a chance to review his due diligence, look at the documentation ourselves, ask various questions, understand the market studies, and so on. But the starting point was this was not something we sought out. We did not do a web search and say, well, deals available in Manhattan.
And by the way, if you do that, just quickly, sorry, if you do that, like you're buying the crap no one else in America wants. By the time it's on the web, no one else
exactly
wants.
Right. Yeah, so this is very much a private deal based on relationships that we have and that other people would simply not have access to. So I think this is one of those examples. Every single one of the deals that we have was sourced or has been sourced through somebody coming to us and saying, do you want to participate? Does this interest you? Is this something that your investor base is likely to go for? And then we can interrogate it and say yes or no. In this case, what was brought to us was a very much established transaction. A lot of the initial property work had been done to a very high standard. Duncan himself works with a team that has a lot of experience in this particular kind of property redevelopment. Historic buildings in Manhattan that are being redeveloped. There's a system where you get historic credits which allow you to benefit, to effectively do your developments at a cheaper rate because you're getting these tax credits. And so a lot of the work had already been done. It was a question of reviewing that and understanding that and getting a sense of the risk return. We already had a strong sense of the sponsor and the way that they would approach this. So yeah, so this particular transaction, what's been offered is senior debt secured by a long-term lease on a property that was formerly owned by the Catholic Church. It's in the process of being transferred from the Catholic Church to the development company. And the funding is senior funding, as I said. It's secured funding. It's 1% a month payable quarterly. So very good return. And we've again, to Scott's principles, we've said we will only take a relatively small portion of it. We're probably going to take somewhere between 15 and 20% of the total debt that's available, so that other people can put their money in. There's a big group of investors, many of whom have invested before with Duncan and with the other sponsors in his team. And so that offers us a sense of comfort. Other people are reviewing the documentation. Other people have experience on this, and there's I think strong alignment with the total investment team.
A couple of things that I think are first you're saying. So firstly, there's power of community. Okay, so like it's not like me trying to do it all on my own. Like, oh my God, I'm going to do all my own due diligence, whatever. It's like there's a whole group of us, you know, like looking at it and whatever, doing it. The second thing is that from a risk perspective, you're effectively taking out the bank. Like you're almost taking the position of the bank because you're putting the first mortgage debt down. So you're behaving like a bank. You're putting the money down. You've got first mortgage debt over the property. So should stuff go wrong, the property's there. It's exactly like when a bank lends you money against your house. And for the bank interest rate, you're getting paid 1% a month, paid quarterly, which basically means you're getting 12% a year in US dollars. Now, please tell me, and again, I've been doing this 28 years, 12% in Manhattan, New York, okay, for a 12-month project, it can be extended to 18 months, but it's still a short-term project, 12 to 18 months. If it gets extended to 18 months, by the way, you still get paid your 1% per month. So you're still getting 12% a year. I mean, that is a really, really good return. Now, you're not getting the capital growth. Remember, you're not playing in this part anymore, but that because you're taking away the risk. So this is an income-reducing deal only, but it's a 12% in Manhattan, New York, and you basically have it secured against the property with a partner that's got extensive experience, So I just want to kind of give people a context of what we talk. And these are real life examples now. Like I didn't want to, someone phoned me yesterday and we had a chat and we were like, you know, we can talk about private equity until the cows come home, or we can talk about actual deals, like, because then it's like literally people can learn from actual deals, you know? So that was the one. Now we're talking diversification. And so I tell you what, one was getting a little time machine and an airplane all at the same time. And we're just going to fly across the world, straight over to another continent, another currency, another partner, another asset class, by the way, because that one is effectively a debt deal. Yes, it's in property, but it's a debt deal in property. And now we're going to fly across the world to Germany, which, by the way, is the #1 economy in Europe. And we're going to look at a euro deal, and it's actually an equity deal in terms of that process. So if I come here, so let's do the same process now with this deal. Because I'm trying to give people a concept of from the comfort of their couch, they can get access to partners, they can get access to information, they can invest, and they don't have to get on an airplane.
Yes, they don't have to get on an airplane, and they don't have to visit small towns in Germany. So just to give some context on Germany and why the opportunity is a genuine diversifier, Scott, because you know, United States, Manhattan, that is the center of the universe, at least according to New Yorkers, that, you know, and a lot of people, that would be the center of the universe. In Germany, a big chunk of the economy is run out of towns that you and I are unlikely to visit or be able to find on the map necessarily without some kind of help. So I mean, the examples are Volkswagen's based in a town called Wolfsburg. This particular town, Wuppertal, is home to a couple of industrial brands like Vorwerk and suppliers into the motor industry. It's not far from Düsseldorf, but it is a secondary town, but with a very strong industrial base. So just to give a sense, this kind of opportunity is fundamentally different and is a genuine diversifier. And in Calio, this would be the third deal that we've done with the same sponsor. The sponsor, interestingly, was also introduced indirectly to me through people that I knew, and several people that I know had invested with him previously, and very successfully. It's managed by somebody called Peter Katz. Peter used to run the Redefine portfolio in Europe. And he then went on his own and uses private money and has a very similar mindset to us, which is quite important. He also raises funding, does a kind of an equity raise for each individual investment, and does it. He wants to do it through people that he trusts and that he knows. So as I said, this is the third one we've done through Callio, but before that, I'd actually been exposed to several of his other transactions. And again, I'm used to his due diligence process. It's very rigorous. It involves technical elements, engineering studies of the buildings, for example, studies of existing leasing documentation, tax structuring, and so on. Those are extremely important in this kind of transaction. What's been offered here, though, and again, to Scott's point, is actually equity. So it is an equity exposure. It does have a reasonable yield. We expect a kind of mid to high single-digit yield initially. It has in-place debt, which is important. It has debt that was entered into and that will be assumed on transfer of the property when interest rates were still low and that were fixed at that time. So there's a massive benefit in that.
But just on that, sorry, so what's really important here, people always say to me, oh, but Scott, if I buy a house, I'm getting a mortgage, so I'm getting leverage and, et cetera, et cetera. And what you're saying is so important because you are still getting leverage. The only difference is, even if you got $100 million and you fly to Germany right now, the chances of you getting debt are zero. Because you've got no relationships. And if you do get debt, you're going to get very expensive debt compared to partnering with a local person that's got a track record, got experience, has the debt in place, and like you said, has fixed it prior to the interest rates rising. So it sounds too good to be true. And it is if you're trying to do it on your own, unless you've got partners.
Yes. So these deals that these deals that we're talking about, Scott, are a little bit different from the deals that we normally do as a pure private equity house. Anyone who visits our website will see deals that we've done directly. These deals are deals that have been brought to us by people who are part of our community, and people that we've invested in personally, or who are people that have been invested in by like friends of ours and other members of the Callio community. And so these are a little bit different, but these are not possible to do from where we're sitting. And we have to rely on the individual partners and the networks that they've built. So for example, Peter has a whole team of people who do due diligence for him in Germany. He has a legal team that has worked with him on multiple transactions. He has an administrative team that is able to manage the investment structure for him. And those are things that if you and I were trying to build those from scratch or trying to do on our own, we simply would not be able to do without years of work and without having been in the market previously. And the benefit of somebody like Peter is he built up his infrastructure while working for Redefine and building their European portfolio years back. Then going on his own, he decided to focus on particular asset classes. He did a study. He said there's certain kinds of assets that seem to do well through the markets. Health assets, diversified assets, basic necessities, properties that deal with basic necessities. And then the German market in particular has certain resilient features to it, including the availability of debt from multiple funders. Again, but Scott's point stands. It's not possible for us to arrive there, drive out to Wuppertal, and to start doing deals. These deals come along quite rarely. This is the first deal we've seen for over a year from Peter. Just hasn't felt that the other deals that he's seen are good enough for his investment, for his investors.
Yeah,
so that's just
to put in perspective, so the last deal you guys did with Peter, and you've done 3, so there's track record, yes. You've already said. But I remember there was a deal as COVID was happening, and one of your investors got spooked, and there was a gap for 700,000 euros. And I was like, pick me, I want to be in it. And we tried to go to our investor base, and like we just couldn't move quick enough, because these things move quickly when it's a good deal. And again, I remember it being a DIY store,
yes.
Anyway, and the long story short was it was a great income return. It had good capital growth. And you guys exited that in 18 months or something and got a 1.8 multiple, which basically means if you put $100 in, you got $180 back, which is like really good in less than 2 years. And it's, again, like it was, for me, it was so frustrating. It was like, I was like, I want to be in the deal, but we just couldn't act fast enough, And one of the reasons we created the mastermind was that sometimes through the Wealth Migrate platform, it takes too long to get stuff set up and blah, blah, blah. And sometimes with the mastermind, it's like, guys, it's a good deal. you know, we need to move quickly. Are you in, are you out? And then sometimes that's how private equity works. You know, it's, you've got to be able to you know, act fairly quickly. So when this deal came along and you were like, same operator, same person, I was like, if you don't let us get in this deal, it's gonna be war. You know what I mean? So yeah, so really, really appreciate it. Peter, let's go to the last one. So again, let's go back in our time machine now, back in our airplane, and we're gonna fly right across the world, back to Austin, Texas. And again, we're gonna go into a different asset class now. It's still under the umbrella of private equity, but now you're actually investing in a company, and Peter's I keep saying Peter now because you put Peter in my head. Someone's already mentioned this company backed. Just tell us a little bit about this, because I mean these are literally three opportunities that we're looking to go live with you on, you know, in the near future.
Yeah, so Scott, I want to stick with the theme that you raised, this partnership theme. So backed is the trading name of a company called Austin Business Finance. Austin Business Finance is founded by a South African called Zaan Myburg. Zaan is also founder of Cashflow Capital, which is a business here in South Africa, and is a working capital lender, mostly to restaurants, franchisees, and so on. And he moved to America, and we, as in Calio, started financing him pretty much from the beginning, just feeling that he had a good concept, he was a good operator, and he had a model for dealing with a kind of risk managed model for introducing himself into the US market. So we've been invested since 2019, and we invested in equity and permanent debt. And now that's all been taken up, but the business is a lending business. It does what are called merchant cash advances and lines of credit to medium-sized and small corporates in America. That is a massive market. United States is obviously a very dynamic economy. There are hundreds of thousands, maybe millions of businesses that actually fall into scope for backed. And it's mostly working capital lending of less than 18 months and relatively high interest rates, because it's generally lightly secured or unsecured lending. And what's important is that over the years, we've been able to monitor the credit performance, and we've been able to monitor the management performance. And Glenn and I were there last week, and we sat with the management team. We were able to see Zaan has built a business which now has 56 employees, 46 based in Austin, 10 based in California. He sources deals through brokers and through a direct team. He's got a refined technology system for reviewing deals, assessing the credit risk, and a very small percentage of deals that are referred ever get funded. But there's massive scope in a business like this. Backed was actually rated by Inc. It was rated as one of the top 1,000 fastest growing businesses in the United States, ranked in the top 200 last year. So it's viewed and seen as a successful high growth business. What's been offered is debt, again, at 10% per annum. It's a very different profile, very diversified. That's US dollar debt. And that's money that goes into the business as subordinated debt and then is used to finance the operations of the business, mostly lending, mostly directly going into building the book of Austin Business Finance.
Awesome.
There is a senior lender. And this helps us as well, because it's not just our due diligence. It's Fortress, one of the world's biggest lenders, is the senior lender to Austin Business Finance. And they have a line of $50 million expandable to $100 million.
It's amazing. So, and you also, you guys put your money where your mouth is. As I understand it, yes. Debt and your equity, you've got $20 million in the
yes, $20 million. We have exposure to it. So, and I'm personally invested. Well, personally, it's actually my wife who's personally invested in this business. Glenn is personally invested in this business. So it's we definitely put our money where our mouth is, just generally. But with this opportunity in particular, it's been a very good investment for us. We've been able to see it grow from initiation, and we built a very strong rapport with the management team. Obviously, like any other business, it has its challenges and it has its risks and so on. But the risk return profile, I think, is massively compelling for a debt instrument. To get 10% per annum and to have an investment term of 3 years. Given where interest rates are likely to go, I think I just think that's very compelling.
Yeah, no, completely. Just one thing we forgot to mention here. This building in Germany is, so just to remind everyone, this one is a 12% US dollar income return per year. This one is a 6 to 6.5% euro income return, again paid quarterly, with a total return including capital growth of somewhere between 13 and 15% in terms of that process. And then this is a debt deal at 10% in US dollars. So you've got euros, you've got dollars, you've got debt, you've got equity, just to kind of give you an idea of different types. Selwyn, as always, it's a pleasure to chat. I love what you've done today just with everyone and sharing with everyone. I'd love anyone to give comments in the chat box as to what you thought. What we've done very consciously today is we've taken away a lot of the theory and we've talked practical about actual partners and actual deals so that people can understand it. Because again, I can waffle about the theory till the cows come home. I've got an entire course on it, Wealth Going Global and Asset Mastery. You can go and do all of the research. But in my opinion, there's nothing more powerful than learning while doing. And what you've helped us do today very consciously is go through 3 deals and hopefully for everyone, literally learn while doing. And even if you're watching the recording and these deals are gone, because they will be gone. They're going in the next, one of them is closing in a month, the other one in a month, in 2 months. The point is, might be watching the recording, but it still gives you a concept of when deals come, how they work, particularly when we work with Kalia.
Scott, thank you so much. I love the opportunity to speak about my business. I love the opportunity to speak about my deals. And I'm also glad that I joined early to see what you said about partnerships, because that's so fundamental to the way we operate as well.
Yeah, no, well, look, it's I fundamentally believe it's the collaboration and partnerships is the currency of the 21st century, and that is built on trust. And the reason I say that is that let's say that the currency of the 21st century is trust, but how do you achieve trust? Well, it's collaboration and partnerships. It's the only way. It's the only way to do it. If you try to do it all yourself, it's literally the old school way of doing it, and then you're going to be stuck probably in your country, in your asset class, in your town, in your currency, and because it's virtually impossible to go internationally without collaboration and partnerships and to truly diversify. But there's lots of brilliant comments coming through, Selwyn. Thank you so much for your time.
Thanks,
and have an awesome day, dude.
Bye. Thanks, everyone.
So what do you think? Pretty comprehensive. I see, Joseph, you said Jack Kalia is no Mickey Mouse. These guys are serious operators. Selwyn is incredible. Yep, I agree. So I think, people can really start to see, how this works and kind of who the team members are behind the scenes. So let's wrap up for today. And let me just share my screen here quickly. Boom, boom, boom. So, right. There's another one in the resources, Judd Dunning. He's another one of our sponsors. There's lots. We've got Bruce Saunders. You can learn from all the different partners. At the end of the day, Albert Einstein says the definition of insanity is doing the same thing over and over again and expecting different results. Hopefully today, over the whole week, but hopefully specifically today, I've shown you a whole different way of doing it. Literally, and if you keep doing the same way, you can keep getting the same results. But I'm showing you a whole different way of being able to do it. And I did, share with you, the fact that on Monday it might feel overwhelming. I did warn you about that. Sometimes I get blamed for it feels like you're drinking from a fire hose. I get that. I'm trying to share as much valuable information. We did play the game about the doctor and that if you had to lose, 10 to 15 kilos, how would you do it? And the answer, there were 2 options. You had a home study course or you had a coach. And again, I think you all overwhelmingly agreed that the coach was the right way forward. I've shown you that we have the home study course. If you want to do the paid framework, you need the right partners, the access, the information, and the diversification. I've shown you. Like you can literally go get access to the right partners through asset class mastery. You can get access to the deals through Wealth Migrate. You can get the right information through Wealth Going Global, and you can get diversification through the platform. So the question you have is, do you want to try and do it all yourself, or do you want to join the mastermind and have Kellyo hold your hand? And I always say that in our case, we had two choices, in terms of how do we do this? Because well, even three choices, I suppose. Because the first choice was we kind of just let people do it all themselves, and that's what we basically created with Wealth Hackers. We then we said, look, some people want someone to hold their hand and to kind of get going and come to the Wealth Weekend and to accelerate for 90 days. And that was the Wealth Accelerator. And then the other one was the Mastermind, where we actually do it for you. We bring the family office in and get it done for you. Now, I asked you these questions yesterday, and I want you to reflect on them again. Would you invest $12,000 if all it did was help you achieve your freedom goal? This is really important because this is where you assimilate value in your own life. Like if you could achieve your freedom goal, if you had Kellyo on your team, would you invest $12,000 to achieve your freedom goal? If you knew you could do it, would it be worth it to you? What about if you could protect your wealth? You've worked really hard for your money and you could actually protect your money. Would it be worth $12,000 to you? What about time? If you worked with Garth and Anthony and myself and Selwyn, etc., can you see how you could reduce a decade of your time? Would it be worth $12,000 to you? And what about if you could build globally diversified passive income? You're investing in Germany and America and everything else, and you were getting this passive income and getting the peace of mind. Would it be worth 12K to you? You see, you met Michael on Monday, and what was so interesting with Michael is that 10 years ago, he had a dream and a goal to do it, and he's now done it. And what he said was, he could never have done it himself. And when he did, it was the best money he ever spent. And this is why I ask you, what are you prepared to invest in yourself to turn these things into reality? Stop wishing and start getting. And as you said, it would never have happened. So unfortunately, at the mastermind level, we can only offer it to 5 people at a time. There's an onboarding. That's why we have priority. And if you are keen, you can literally go to that link. I'm looking forward to meeting with you. Either you meet with me if you're in the priority, or you meet with Alex if you're in the apply. You can go and see, there's plenty of testimonials, and you can go and look at all the videos. They're at the bottom of the landing page of Diversification Mastermind. And this is what it's all about in terms of having a coach. Because we will coach you, the family office team will coach you, and you'll get the benefits of being part of a mastermind. And truly, this is where the comfort happens. So that's why we created it, because, sorry, not the comfort. This is where the magic happens. We get you out of the comfort zone. This is where your magic happens. That's why we formed the mastermind. Statistically, you'll get there 5 times quicker, simpler, and safer. 5 times quicker, simpler, and safer, according to the research. And that's really, really important. So what's the homework for today, Silver? Identify one specific risk in your current investments and outline how diversification can mitigate it. Name 3 things which you can do right now to find the right partners and the right information. Consider, joining the Wealth Hackers, the Wealth Accelerator, and the Mastermind. You've got all the links there. And share one key takeaway on social media, again, around diversification. So this is all about, again, sharing. So that's your homework steps for this evening. And then in terms of your gold, you don't have to do it tonight, but when you have time, if you want to go watch interviews with Judd Dunning and Bruce Sanders, I've shared them with you just so you can get a feel of the other partners. That's the formula: diversification across countries, currencies, assets, partners, and time. Again, as a reminder, if you want to get started for free, you can join the Wealth University. If you want to walk and have all the home study courses and have the weekly sessions with us, then you can join the Wealth Hackers. If you want to drive and you really want to sprint, 90-day sprint, then you got the Wealth Accelerator. And then finally, if you want to join the mastermind and jump in the car, then, sorry, not the car, the airplane, and have, Kellyo as your pilot, then it's basically done for you. That's it, ladies and gentlemen, for today. I always finish with this proverb: if you want to go fast, go alone. If you want to go far, go together. And that's our whole philosophy. For the VIP members, we're going to be jumping now into the VIP session. Hopefully all the VIPs are using your workbooks If you're not part of the groups already, I don't know why. And there's always the option to go book a call if you want to go and speak to one of our partners. I do remind you, you've got to have the right partners. It always starts with partners, because then they'll give you access to the deals, they'll give you the right information, and they will give you diversification. And when you bring it all together in the home study environment, this is what it looks like. We've built all the courses. If you want to do it yourself in the home study environment, we've built all the courses. If you want us to hold your hand and have it done for you, we've got an option for that. And if you want us to work with you, we've got an option for that. What is day 5 all about? It's about putting it into practice. So this is where you actually walk away with your wealth plan. And so today has all been about the partners, the who, and tomorrow we walk away with the plan. Okay, that's all about the timing. And so as Nelson Mandela said, money won't create success. The freedom to make it will. Thank you all for your time. As always, it's an honor and a privilege to share what the best in the world are doing, how the top 1% are investing. And hopefully, if nothing else, you've had your mind blown around the possibilities of what is actually happening out there, what the wealthiest people in the world are doing, and how now you can participate. You can either copy them or you can partner with them in terms of that process. So I will see the VIPs in the room now. We're going to pivot into the VIP room. And for the rest of you, I'll see you tomorrow. Now, in any race, it doesn't matter how you start the race. It matters how you finish the race. So tomorrow we need to finish strong. Show up on time, bring your energy. Let's make sure we finish strong, because I am running this 5 days to help you get results. I'm not here to give you theory. I'm here to help you get results. And the only way to get results is you walk away with a plan, you take action, and you execute, because that's how you get results. I'll see you tomorrow. Cheers.